All right, guys. Good morning. Good morning. Hope you guys are well. Today we are here early this morning. We got CPI inflation data. It's a huge day in markets, honestly. The Q, SPY, everything up mostly yesterday. PPI inflation data was lower than expected, which means that today everybody's looking at CPI to continue that bullish momentum here. Yesterday when PPI dropped, we had like 3,000 concurrent viewers. Today, I'm guessing we're going to have like 5. Let me know what you guys think we'll have. But it'll be a big day. It's a relevant day. We have PCE inflation. The Fed, Jerome Powell, likes to look at PCE inflation, specifically core PCE. PCE is the personal consumption expenditure index. It's his gauge of inflation, what he likes to look at. CPI is the more watched retail wise. CPI more, the most retail traders watch CPI, I would argue, and it also has one of the bigger reactions in stocks. Drops at 8:30 today, and yeah, I think I'm watching the markets closely leading into this. We'll see what we get. Expectations for CPI are for 0.2% for core, 0.2% for base CPI month to month here. So we do have CPI coming out. It's expected at 0.2%. Prepare yourselves, you guys. Prepare yourselves. Yeah. Let me know what you guys think. I'll put this up on the bottom of the screen. 8:30. I'll put a timer up as well. It is expected at 0.2% month over month for base CPI and 0.2% as well for core. What do you expect? All right, there we go. All right, let's get some music playing here. All right, guys. So, yeah, CPI day, big day. Today we will pump to infinity. Bitcoin. Where's Bitcoin at? Let me look. Nvidia up to almost 120s again. Basically came all the way back down. I think, personally what I'm doing right now is I'm trying to buy real estate with cash, right? Now, short term, there's always risks. I genuinely don't know if real estate's going to go down or up. Over the next short-term period, like the next year or two, right? I genuinely no idea. It's short-term's hard to predict anywhere, whether it's stocks, whether it's real estate, whether it's bonds, are a little bit easier, but, the point is nobody freaking knows, right? What I do know is that Powell will most likely cut rates in September, next month in September, right? When he starts lowering the federal funds rate, if he does multiple cuts or if he does like a 50 basis point cut, eventually that's going to trickle into mortgages. Right, within like 6 months to a year, it's going to trickle into mortgages. When that happens, everybody's going to have a lot cheaper access to money. They're going to have a lot cheaper access to lending. They're going to have lower interest rate for their mortgages. And one of the consequences could be, I'm not even going to say it's a certainty or it's even probable. One of the reactions could be real estate prices spike. Real estate turns from a buyer's market right now, where we got the option to buy a lot of different properties. Cash is king because interest rates are still relatively high versus the last 10 years. In a year from now, it might be a completely opposite thing where it's a seller's market. People decide to sell. There's so few homes on the market. Everybody has cheap access to lending that it's a seller's market. Cash doesn't get you as much of a deal in a year. And so because of that, right now, I'm trying to buy we're trying to buy real estate right now. And I'll see what happens, right? I don't think it's a bad idea. And, I always like real estate because real estate's kind of a double, like bonds will pay you 5%. You could usually find a bond in this current environment, at least, to pay you 5%. You could buy a T-bill ETF. You could buy, a CD, a certified deposit at a bank and just kind of, go to a bunch of different banks, take advantage. Or you could buy real estate. Real estate is beneficial for a lot of reasons. One of them is because it appreciates on average about 5%. So it's going to appreciate about the same as a bond in general, right? But not only that, but it's also going to pay out rental cash flow if it's a rental property. an investment property is going to pay out cash flow. Now, sure, about 40% of that is going to get wiped out in taxes and expenses, but, you know, it's still a pretty good deal, right? And I think it's a little bit more diversified than just general stocks. But it's definitely not as passive. So, pros and cons. Will Euro go up or down today in CPI event? I don't know. No idea, bro. Please just don't say the same thing every day. Or don't say the same thing over and over again. Somebody said it's still a seller's market. I don't know, man. It's been a while since I've done real estate. I don't know. I think it's transitioning to a buyer's market. I'm seeing a lot of price reductions in a lot of places I'm looking at now. That's why I'm trying to swoop in and buy cash. But who freaking knows, man? Real estate's not the most predictable. Oh, there you go. There's the music. Yeah, gold. Stocks are looking good, man. For me, I play the strategy buying real estate of like low-hanging fruit, right? So like I want to go in and offer under list price cash, and eventually somebody's going to accept, you know? Like that's the move. How the dogs are great, you know? Honestly, Bruce is looking really good. Bruce has allergies. And so Bruce, man, like I love Bruce. My whole family loves Bruce. He's a really good-natured dog. Like he's really sweet. He's got a little bit of cage and like he's got a little bit of crate anxiety. So when he's in his crate, like when we bring people over here, it's kind of a bad impression that Bruce gives them. Even though Bruce is the sweetest dog ever, right? Unless you don't know him and you're in his home, you know, then it's a little bit different. But we bring people in here, and Bruce is in his crate, and Bruce is just like barking and yelling and crying and growling, you know. And as soon as you let him out his crate, he is just the sweetest dog ever, you know. And I would say Bruce is probably more friendly to strangers than Rosie is. You know, Rosie is not friendly at all towards people in general, right? If she doesn't know you, she's not your friend. She's looking at you like, who the heck are you, bro? And so, yeah, she... But anyways, Bruce had... The only flaw of Bruce is that he had so much flaky allergies that he was flaky all over the place. His face was flaky. His skin was flaky. Like, he would get, like, these fungal infections on his neck. And, like, it was kind of gross. And so I would pet him anyway, but my kids would basically refuse to pet Bruce a lot of the time. And, you know, my wife and I felt bad for him. We brought him to the vet multiple times. The vet basically was just like, hey, he's got dog allergies. And so we tried a couple different things. Finally, we figured out allergy shots. You know, they're like $200 a month. But we gave him one of those, and within a couple weeks, everything was better, right? Like, he had no flakiness. He had no fungal infection on his neck. His ears got better. He stopped scratching as much, and he was just overall much happier. And so it looks like he's going to cost us about $200 a month just in allergy shots, but it's worth it, honestly. I'm happy to pay that just so he can have a normal life, you know, because he just seemed unhappy. And so he's doing a lot better. Anyways, let me get back to stocks. Do you think yesterday's data was in favor of dollar strength, but eventually it acted oppositely? I think dollar strength would have been higher PPI. Higher pricing is better for the dollar, obviously, right? Lower pricing is worse for the dollar. Same thing with CPI. If CPI comes in low, it's good for us, but bad for the dollar. The dollar inverses equities in a lot of other markets, right? So when the S&P moves up, the Dixie, as an example, is going to move down a lot of the time, and vice versa, right? Today, the Q is gapping up. If you look at the dollar index here, you know, if you look at the Dixie's down to 102s, 102.40s. So, yeah, So the dollar index is going to inverse a lot of things, but with regards to inflation data, it's going to have a positive correlation, right? So CPI coming in high is going to be good for the dollar. Coming in low is going to be bad for the dollar. I love the way you talk about them. Means you're invested in them. What, my dogs? Yeah, I love my dogs, dude. I'm a dog person. I really am. Like, I love dogs. It took me years to talk Carol into getting dogs, right? Carol's allergic. So, like, I kind of have to do most of the work with them, but that's okay. But I was always a dog guy. Like, I raised dogs my whole life, you know? Mostly labs. Like, I had a couple chocolate labs as a kid that my dad bought me and made me take care of. The CPI inflation data coming higher.
All right, guys. Good morning. Hope you guys are well.
Does it come in higher or lower than the 0.2% month over month expectation? Higher, lower. I don't know. See results. There you go. Yeah, sorry, I'm going to put you in timeout because you're saying the same thing over and over again. I don't know about the euro, bro. No idea about the euro. I'm not really a Forex guy. Yeah, so the music should be good right now. Yeah, the only homes, like, again, the only homes I'm okay with buying right now are low-hanging fruit, so to speak, right? Like, I'm putting in cash offers lower than list price, you know? Like, cash offers lower than list price, not, as a real estate agent, you don't want to pee off the seller, right? But, like, I'm playing a numbers game. They should understand, like, I'm putting in a cash offer. If they want to get the deal done, they can accept a little bit underneath it and try to just end it. I got to sign the contracts right now, you know. They have to drop rates eventually. Well, they're going to drop rates next month, Osborne. So they're going to drop rates next month. Jerome Powell is going to lower the federal funds rate. The question is, how long does it take for real estate prices to come back down some? Yeah, so I'm looking up a couple things. When rates are cut, it typically contributes to sustained price growth, especially if the rate cuts are part of a broader economic stimulus. I'm assuming they mean like QE, like money printing. Continued low mortgage rates can keep demand high, which in turn supports higher home prices. It's a lot of other factors house into it, though. Housing supply, if the market becomes too heated due to too long of low rates, there's overvaluation risks. If rate cuts are made in response to a recession, the positive effects of a housing market might be muted, though. And so that's important to consider as well. Regional factors are important too. All right, guys, the NASDAQ, the Q, Nvidia, all up big. Expectations are 0.2% today, 0.2%. Yeah, the thing about real estate is that like people always like look, you can try to time the market, and timing the market is fine. But like I'm in Texas, right? Here's a graph of Texas real estate prices from August 2004 to August of 2024. Okay, so like the thing about real estate prices is that you're gonna make money over time, almost certainly, right? As long as you don't buy bad trending neighborhoods is the easiest way to put it. There's some neighborhoods that turn, and there's always risks of that. But in general, homes are gonna go up over time, right? Even if they're in bad neighborhoods, a lot of the time they're still gonna be valued more than where you bought them. Yeah. All right, guys. CPI inflation data. Let me get a graph here. Or I think I've already done a graph. Let me do a timer. And again, I'm worried less about short term. It's not like I'm gonna sell it. The only way I would sell my home is if it appreciated like what I thought was too much. Or not my home. If I was gonna sell my property, like it depends, you know. And again, it's still too early to even say that. We got to see if we can get an offer accepted first, you know. All right, so it is 7:10 market time. We've got about an hour and we got about an hour and 19 minutes or so. Really, it's about an hour and 20 minutes, so this actually might work perfectly. Yeah. All right. Here is the timer, guys. Hour and 20 minutes right above me. Hey, Mitch, what's up, dude? How you doing, bro? At this rate, in 20 years, the average house in the U.S. will be $1 million. Right, for sure. And I'm trying to get in on that. Somebody asked me yesterday, right? We were talking about inflation. And we said, hey, what do you think? And somebody was like, hey, how do I get around this? Like, how do I deal with high grocery prices? Right? Like, how do I deal with high grocery prices? How do I hedge against that? And what I told him is, like, you got to stick your money somewhere. If you sit on cash, there's risks. Right? The only real way to hedge against it is to buy an inflation hedging asset. Real estate, gold, the S&P 500, bonds, right? These are all going to hedge against real estate, some with higher risk profiles and some with lower risk profiles, right? Like bonds are virtually guaranteed money. You can make 5% in bonds very easily. You can use certified deposits. You could buy the T-bill ETF and get automatic 5% annualized monthly dividend payments into your account every single month. They're going to pay, like, again, I had $70K in T-bill. I had $70K in T-bill position. In a T-bill position, they paid me like $306 a month in interest payments every single month, like clockwork. I got paid that, and so there's a lot of ways to hedge against those price spikes. You know, so you just got to understand it. And long term heals a lot of wounds. Short term, anything can freaking happen. You know. Tesla back up to 207s. I didn't even see where Tesla ended yesterday. Tesla at 207s. Median home price in Cali is 800K. Right. I'm honestly surprised it's that low, Jay, to be completely honest. I'm surprised 800K is the median. I would assume 800K is the low end of that, right? And for me, like in the Woodlands, right? Like my guess over time, like you see Austin, Texas popping off and going big, right? Like I live around the Woodlands, Texas, which is like it's a really desired city. It's kind of snooty for me. It wasn't my but it's nice, right? I think over time, especially specifically here, what's going to happen is that prices in these homes here are going to appreciate a lot, and in a couple decades, I think it's going to be similar to like Austin in that regard, or even Cali. This is a super desired part of Texas, and like I think real estate prices here are going to appreciate. I might be wrong, not a real estate professional, not liable. If you lose, don't sue me, not an investment professional, don't copy me, but still, that's my guess. Right, 100%, dude. And there's actually a law here that says you can't cut down a tree without like approval. I'm kind of a guy. Listen, I've lived here for a decade. When it comes to cutting trees down in my yard, I would rather ask for forgiveness than ask for permission, if you know what I mean, because they are genuinely strict on even like little bitty trees, and so I'm just gonna ask for forgiveness afterwards and say, oh no, the tree, I accidentally cut this tree down. But it's not like I'm cutting down all these big trees here either. But yeah. First cut, then ask. Right. Would love to see price rips here off CI. Yeah, I mean the market is. We had the yen carry trade, right? And what happened is that these traders had all this cheap access to leverage through the Japanese yen, and they were using that to buy U.S. assets like bonds and stocks and all this different stuff, right? Well, when the Bank of Japan, which is their central bank, came out really hawkish, like really restrictive, like the less favorable cheap loans and lending and money, everybody panicked and sold their positions thinking that they were going to have less favorable interest on the yen. And so what happened last Monday was we had this really big flash crash from people just panicking, being like, oh no, the yen's not going to be cheap anymore. Like we're going to have to sell our U.S. positions. And so they unloaded all their U.S. positions, caused this big dump in markets. And, essentially since then, a lot of people were panicking. We've kind of bounced all the way back since then. So we're all the way back to higher than where we were. Nvidia is still leading this market though, guys, and I think this is going to lead into Nvidia earnings in 2 weeks is going to be massive. The last Nvidia earnings report, again, we had over 10,000 concurrent viewers for Nvidia earnings. The one before that, we had 14,000 concurrent viewers for Nvidia earnings. It is. I would say it's like the new CPI. Nvidia earnings is something every single person is going to be tuning into because it's so massively influential. Like this is an incredibly important thing. It's like the Super Bowl of the stock market, I would say right now. More important than CPI today. More important than any other economic report, including the FOMC decisions and press conferences. It's a ridiculously large report. And yeah, you want to pay attention to it. Tomorrow, we've got jobless claims, Empire State Manufacturing, retail sales, Philly Fed Index. We got a gang of stuff tomorrow too, but yeah. Yeah, for sure. I like the trees here, honestly. But again, the Woodlands is super nice, bro. It's super nice. When I first moved here, I couldn't figure out anything. I didn't know where to go or what to do because everything looked the same. There's so many trees around here. But the only problem is like prices are elevated here. Like everything's more expensive here. But again, that's why it kind of looks like a early form of Austin to me. And I think over time prices might appreciate in that regard, in that way, So did the risks with the yen carry trade disappear? No, they're still there for sure. Yeah, I mean, they definitely didn't disappear. Like, I'll explain it a little bit more detail, but they didn't disappear. The Bank of Japan, from my understanding, pivoted a little bit back to a less restrictive stance, and that eased a lot of people's fears, and so they ended up, a lot of people bought the dip as well. It caused like cheap entries, which we haven't really had in a long time. Yeah, so last Monday was August 5th. I was in Florida when this happened. So, hey, is Mitch, are you still streaming over there on Trade the Pool? Let me see. If so, y'all go subscribe to my guy, Mitch. Yeah, y'all, he's still trading over there. Here, I'm going to post this link. I'm going to expect everybody here, all 500 of you guys right now, to go subscribe to Trade the Pool and hang out with Mitch, too. Here, I'll put this link up. Check it out. Go give that man a subscribe. Check him out. There you go. Go to that link. Hopefully it popped up. Let me see. Gotta make sure the link worked. Yeah, it worked. There it is. So go check him out. Will the Blackwell news cause any negative effect for Nvidia earnings? I think it's possible. So the big thing about the pivot today, or not today, over the last few weeks, another thing that caused the big flash crash that we faced last Monday was the Blackwell chip. The Blackwell chip, just to put it into perspective, is like Nvidia's golden goose, right? It's the product that they are offering that they are the most optimistic about. They've been very outspoken about it. They've talked a lot about it, and they're delaying that. They put out some news that that's another reason the market went down last Monday. So yeah, the Bank of Japan, after the crash on last Monday, they did adopt a more dovish stance. Deputy Governor Uchida emphasized that the Bank of Japan would refrain from any further rate hikes while financial markets remain volatile. He said the shift came after the market turmoil caused by the rate hike last Monday, leading to strong response in stocks and currencies. Their new approach suggests they are prioritizing market stability over aggressive monetary tightening. So yeah, basically, what I thought was that they pivoted a little bit and they turned a little bit more dovish afterwards, and they did, right? So I think people were fearing that they were going to continue to raise rates, restrictive stance for the yen, and instead they kind of pivoted back to a more dovish stance, and that calmed things down, eased things a little bit. But again, we're still not out the woods yet. If CPI comes in hot today, we could be in trouble. Yeah, you might be right, Mitch, for sure, dude. It was a weird thing. I was on vacation, so I didn't even get to cover the early stances. But I know it was a big thing because we didn't have any economic data. We almost had 1,000 people watching, which is big for like a nothing day. You know, like days where we don't have anything. It's pretty big. And so we had a lot of people. I think people tune in to watch things burn sometimes. Again, for me, like cash is going to be king until the Fed starts to cut rates. And so I'm trying to pick up a couple bottom feeding real estate deals right now. And I think that, and again, I understand the risks I understand my issue. The only issue I have is that the real estate market is up so much residential wise. And so, you know, cash is king right now because interest rates are still relatively high and people don't want to refinance. They don't want to get mortgages. It's turning into a more buyer's market right now. And so I can put out some really low offers of cash and see if they accept it. If they do, great. I got a really cheap real estate deal. If not, I can just sit on my money. I don't know what I'm going to do with some of my other savings. I'll probably just put them in either bonds, CDs, treasury yield ETFs, something, and just let them sit. Yeah, so I see VSCO, Victoria's Secret. What do they have? Do they have earnings today? Big gap up. Speaking of that, mortgages showed up at 6.54%. So 30-year mortgage rate did decrease a little bit more, down to 6.5%. I'm assuming this is earnings related, right? Did you end up taking photos? Yeah, I took photos with the family yesterday. Yeah, of course I did. I wasn't going to miss that, and they were going to wait for me, you know. All right, we got almost 600 people here. I'm guessing at 8:30 today we'll have like 4,000 or 5,000 people watching. I'm guessing. Again, who knows? But yeah, so VSCO Newswise, they appointed a new super chief, a new CEO, super CEO. Do they call it a super CEO? What a name. They appointed Hillary Super. Oh, okay, never mind. I'm dumb. Hillary Super is her name. And she's the new CEO. Okay, gotcha. Timothy Johnson is going to be interim CEO. So they're up a lot from it. They also did their earnings webcast about a week ago. Gotcha, yeah. I thought they had some special title, Super CEO. You know, be like, I want that title, you know? I'm gonna start calling myself that. Y'all were about to hear that in everything. I was gonna be like, everything, everywhere you look, it's gonna say John Super CEO. You know, that was gonna be freaking everything, you know. Look on Twitter, X, John Super CEO, you know, YouTube, John Super CEO. That was about to be it. You know, what a last name though. I'm kind of jealous, you know. Yeah. Gold's gonna pump. Gold is already pumping, bro. Gold is breaking lifetime highs over the last couple months and still up there. Hasn't really pivoted back down yet. We got this Christmas music they're playing right now. Sir, please tell me today's CPI impact on euro US dollar. Please stop spamming, bro. Please stop it. I will ban you for life, sir. I have no idea. I don't know what the euro US dollar does. I'm not sure how it reacts. Okay, dude. Now you're just being toxic. It's always Forex traders, dude. I'm not judging you. But the Forex traders are the only ones spamming stuff. They're like, hey, look at XAU. It's like gold, which is gold, right? Forex gold. Every time. All right, guys. Stock market's been on a tear, though. I'm getting a little skeptical of buying it up, though. Like, I know we had this big dip. Everybody's buying it. But I really am kind of skeptical of investing heavily into the stock market right now. I think it's up too much. AI's caused massive valuations. And I've been like this for the last few months, you know. I'm just nervous about buying up, you know, any of this stuff right now. I think a lot of it's too high, and I would rather wait. But again, who knows? You never know. Nothing's that predictable in stocks, especially. But where's Apple at? Apple is up there too. Yeah, this is a Christmas beat, believe it or not. The permit required to cut down a tree conversation just sent me down a rabbit hole. I have no idea if I can legally cut down the trees in my yard now. Yeah. I mean, with me, I'm like the scene in Goodfellas where they pop the trunk, but instead of the mean connected guy, I'm instead doing it to a tree. You know. If there's a surprise, it would be on the downside. Yeah. Market's priced in rate cuts, sure, yeah. You think Amat? I don't know. They put a bunch of Christmas music on my playlist, bro, is what it is. All right, guys, we still got an hour before inflation data drops. We got 600 people here live. This one's called Trapping All the Way. Trapping All the Way. I like the beats, but it's not Christmas. I just can't do it yet. I just can't do it yet. What are we talking about? We're talking about cutting down trees in the woodlands, which is, again, to put it into perspective, the woodlands has, like, you can't cut down trees here. They get mad at you. They'll fine you for it is really what they'll do. Yeah, no trees are safe out here. Which is, I'm fine with the no tree rule. I think it means homes here appreciate more. because it's desired. So how many rate cuts do you think they'll do this year? Right. I think they're going to do 25 to 50 basis points next month in September. And then I think following that, we're going to see, I think we're going to see sustained cuts. I think we're going to cut in September. We're going to cut in, what's the one after September? Like, if you look at the Fed watch tool here, you know, they're going to cut in September. It's actually, the majority of people think they're going to do a 50 BP cut. November, everybody's still expecting, you know, more. I think this would be another 75 basis point cut, or a pause here. But, and then in December, the question is, do you think they continue to cut this year? A lot of people think we're going to be back to 4.5, 4.25 by December. You know, but the most probable thing is about 4.5% interest. Yeah, what I'll tell you though, Don, is that the Woodlands is a little bit different from most places, right? Most places aren't like this. CPI inflation data is going to have the biggest influence today, for sure. It's expected at 0.2%. The CPI data affect Bitcoin? Yes. When everything is above 25 PE, you should be afraid. I'm not really afraid. I'm just taking appropriate measures to protect. I'm pretty sure you can cut anything on your own property and cut down any tree on your own land. Not where I live. I mean, you can. You're going to get feed. Jon Snow winter is coming. Honestly, I'm so disappointed at the last House of Dragon episode. I really am. I'm mad about it. I'm genuinely mad about it, dude. Like, they have, like, the Dance of the Dragons is not some, like, super long event. They're trying to procrastinate it and drag it out and make it longer than what it really was meant for. And so they're dragging it out, dude. Nothing happened on the season finale of Game of Thrones, House of Dragon. We gotta wait years to see anything happen? Freaking crazy. Nothing happened. Like, I disagree. You know? Right, I'm still bummed out. Season 1 was definitely better. More stuff happened. They basically, you know, Damon's horsing around at Harrenhal, you know, like, not doing anything. Cyrax is over there like, what the heck, bro? Like, you're just leaving me out here while you're going to, you know, like, you're just freaking hanging out with this witch lady. Like, it's just, you know, I'm just disappointed. Yeah, the last episode, I'm like, something big is going to happen, you know. I watch it, I'm like, nothing happened. You know, basically the same thing that's going on all season. You can tell they're just trying to milk it, and that's frustrating for me. Yeah. Yeah, serve has gone up a lot. And it's gapping up today, too. Looks good. It just broke out. Here, serve. Serve's pity stock gapping up some. Yeah, now we got to wait 2 years. It's disappointing. Can we please talk about the market? Dude, I'm going to talk about whatever I want. Like I said, we're not going to be only able to talk about the market here. It's not a reasonable expectation. You know, I'm going to talk about life, family, dogs, kids, dragons, you know. And you're just going to have to be okay with that. If not, you go watch somebody else. It's all good. The SPY at 540s, though. So we will pivot back to the market, but not because you told me to. Yeah, no. So we're expecting 0.2% CPI data today. It's a big report. CPI, the most watched, I would say, retail-wise inflation metric. One of the biggest reports. I would say CPI is the biggest retail-watched report that drops monthly. CPI inflation. Today expected at 0.2%. Year over year, they're expecting 3%. Let's talk about dogs. Dude, don't even get me started. Unemployment is getting more important. Unemployment, 4.3% last time. It's not conventionally high, though. It's still pretty low. Payroll numbers are still pretty good. I don't think the economy is turning yet, but, the Fed's job is to keep a balanced economy. I'm okay with cutting rates a little bit. I don't want economic stimulus, money printing, quantitative easing measures, right? That is going to make everything worse, not better. It's going to cause inflation to spike. And I think today's inflation report is really important in that regard. There's no link for CPI. We're going to cover it here as soon as it drops. The expected number, I'm showing 3% year over year today. What are you guys showing for year over year expectations? I'm showing 3. Yeah, I'm showing 3% year over year. It's not 3.3% for sure. Dude, I swear. There's some type of weird thing in AirPods that intentionally make it not work on a PC. Which rate should we be worried about unemployment? 6%? I mean, 6% is high. I think you have to understand the thing about unemployment is it's all relative to recent numbers, right? So like the SOM recession indicator as an example, what it actually is if something increases unemployment wise over 0.5%, I think it's within a year, or it might be a little bit less than that. Might be a little bit longer than that, but if it increases 0.5% rapidly in unemployment, it can signal a recession, and it's pretty accurate. It's not perfect, but it's pretty accurate. So we slightly triggered that last week with unemployment at 3.8%, or 3.4%. Sorry. So regardless of what the average unemployment is, we still spiked up 0.5%, which did trigger the SOM signal. Which is a recession signal. But with that said, I like AI because I can use abbreviations as well. I don't have to write up all these big long stuff. I can just use abbreviation. Yeah, so in 2020, unemployment was at 15% in April. 2021, it averaged around 5.4% by the end of the year. 2022 got better at 3.6 to 3.9%. 23 still remained low at 3.5 to 3.7, and as of now, it's ticked up to about 4.3%. Over the last 5 years, the average is about 5%, though, so we're still decently under average unemployment numbers. But again, the SOM rule did trigger as we were at 3.5 to 3.7% last year, and now we spiked up to 4.3%, which is 0.5%, half a percentage point, and in turn triggering the SOM recession indicator. So it ain't good, I'll tell you that. Yeah, I'm watching that one, Mitch. Let's see if it breaks 1250, brother. All right, we got about 700 people here. We still got an hour before CPI drops. You guys sure CPI were to come bad? No, it's not for sure. Nobody knows. Nobody knows if CPI is going to come in higher, worse, better, lower than expected. Nobody knows. We can only wait and see and react to it. And a reactionary mindset's the best thing. This is something that Mitch used to always talk about. Be reactive, not predictive a lot of the time. Sometimes you can be predictive, but like reacting to things is usually a higher edge system, I would say. It's designed to warn the Fed and policymakers of an impending recession. Get a Mac, bro. Macs are cool, but they're overpriced versus the specs they give out. You know, I like Macs. I like the UI, and I like the operating system of Macs. I really do. I like Macs, right? The problem is that they're 50 to 75% more expensive than a PC. And PC is going to be more free, easier to do things on, and ultimately better specs, quicker. But Macs are good. I just don't know if they're worth paying. If they were the same price, I'd get a Mac, right? But they're not the same price. Like if I would, for the same price, I can get a Legion laptop, gaming laptop, very good laptop, super high specs, 32 gigs of RAM, i9 or whatever is the newest processing power now. I can get it for the same price as like an 8 gigabyte Apple laptop, right? And so that doesn't make any sense to me. That's the only problem with Apple. Stimulate the economy? Come on now. No, we shouldn't stimulate the economy. Not outside of rate cuts. No more money printing. I think we've gotten ourselves in trouble with all the QE and money printing that we've done over the past 5 years. And the Fed's actually pivoted to a more, what's called a hawkish, like a restrictive monetary policy stance. They've been doing they've been doing a quantitative tightening for the last few years now, which is basically them reducing their balance sheet, taking liquidity away from those markets. And this causes banks to keep interest rates high. And they've stopped printing money, and they basically, they've done QT, which is the opposite. They raised the federal funds rate, and then for the last year straight, they've paused the federal funds rate, keeping high interest rates, right? They're trying to restrict the economy so that inflation goes down is what they're doing. But ultimately, it does push the economy down. And it's kind of like picking up pennies in front of a train track. If you do it for too long, eventually we're going to hit a recession. Or worse, right? Which I hope we don't. But we'll have to wait and see. No recession. Yeah, I mean, it depends on where you look, right? I don't know what we're gonna do. I'm always pretty, I'm always pretty neutral. Like, I don't know. Recessions are a normal part of economics, and so eventually we're probably gonna hit one. Tesla all the way back up to 207s. Yeah, so the last official recession was in 2020. So the problem with people predicting another recession, right, is that these things don't generally happen that much, right? So the last recession being 4 years ago, that's a pretty short period of time relative to now for another recession to hit, right? I'm not saying we don't. I don't know. Nobody knows. We can only guess, speculate. The Fed can come out and just ultimately try to stop it if we do get close to one. But we already hit a recession in 2020. It was a small one, but we still hit one. And it's very rare that we're going to go into a recession and then 4 years later go into another one, especially during an election year. It's pretty rare, right? So that's what I have to look at here is that. But with that said, a lot of signals like the SOM indicator predict a recession. So again, I'm not saying we don't. I really don't know. No, please don't do what Ezekiel says here. Hey, thank you so much, Mitch. Appreciate it, brother. Appreciate you stopping by, dude. I'll have to get you on the show next time. Today's CPI, so we got a bunch of stuff we got to cover today. But come on the show one day, brother. I'll message you after the stream, dude. Y'all go subscribe. Hey, I'll put the link up again. Y'all go check out Trade the Pool. It's right here, man. Y'all go check it out. Support your boy Mitch. Great guy. I was telling people yesterday, all right, I've worked with a lot of people in business over the years, right? I really have. Mitch is one of the most real ones. He's one of those guys that he was actually a good business partner. I was probably not good, right? I'm kind of controlling and OCD or whatever. Mitch was solid, dude. Mitch was solid. Out of a lot of people I worked with, Mitch was one of the most solid people. So shout out to Mitch. All love here, brother. All love, man. I wish you the best. Again, we'll get you on the stream one day, dude. Y'all go subscribe to this man over at Trade the Pool. And check him out. Good dude. Knows what he's talking about. Y'all go check it out. Yeah, for sure. 100%. Is gold up or down? Gold has been breaking lifetime highs. Yeah, me too, brother. Me too, dude. You know. Hope you and the family are good, brother. Nvidia, $90 was the bottom? I don't know, dude. Nvidia up to 120s, man. Now, remember, 140s are the highs. Earnings are going to be the influence today. Or not today. Earnings are going to be the influence. Earnings are going to move this thing. Whether it's up or down, everybody's paying attention to this. I would say this might be one of the most important Nvidia earnings reports. Nvidia's in a downtrend over the last 3 months. It's been downtrending for months now, leading into its earnings report at the end of this month in August. I think it's August 28th, right? That's a massive report. Everybody's paying attention to it. Yeah, so hopefully Carol, I told Carol yesterday, I was like, listen, baby, 8:30 Eastern Standard Time, so 7:30 our time, is when economic reports come out every day. I was like, if the whole stream knows, you show up right at 7:30, 8:30 market time. And so today, if you're going to come in like 10 minutes before that, and I'll give you guys hugs and say bye. You know, if you come in at 7:30, I'm basically going to have to ignore. Retest all-time highs? Maybe. Again, CPI expected at 0.2%, chat. 0.2%. 3% year over year. High or low, guys? Looking at we did a voting poll here. 46% think lower inflation data. 38% think higher out of about 1,000 votes. You can't ignore Sweet Baby. Oh, if Rosie comes in here, I'm petting her, you know. But if it's at 8:30, I'll probably cover the market news and then pet Rosie, you know. Carol, I could definitely ignore Carol, you know. Carol and I have been with each other for 14 years. I can literally look at Carol, you know, kind of slanty-eyed, and then be like, hey, you know. Hey, thank you, Optimus. Or Optimum. I don't know about CPI today. I really don't know. Last time they showed up at negative, so I'm going to think we're going to show up slightly higher than expected. But I also think they're getting pressure from the Fed. I think the Fed wants to cut, and I think it's important today because the Fed said they're basically going to cut next month, most likely. Things can change. The one thing that's going to stop the Fed from cutting next month is if inflation comes in super hot. If inflation spikes, the Fed's going to think really deeply about whether they should cut or not next month. And so this is certainly something I'm paying attention to today at 8:30. Is gold going to sell? No idea. 45 minutes. SPY completely flat, choppy, boring, neutral, as expected. I mean, that's what we had to expect of it today. Hi, baby. Huh? I made 7 cups. Okay, did Maddie get hers? Okay, well, Maddie took all of it, then. You gotta get on to Maddie. Okay, I'll make like 8 or 9, but yeah, we made 7 cups. That should be a lot. I only got a little bitty cup. Look, I have this little bitty mug right here. So, like, I know. Maddie, with her coffee milk, probably poured a whole gag. I know, but that's Maddie. All right, love you. My daughter's stealing all the coffee. Is that the most important day of the year? Fed ain't cutting nothing. I think the Fed's gonna cut in September. If you listen to Powell, that's what he said. You don't know for sure. We don't really know. What do you think about this oncoming CPI news affecting gold? I don't know. Gold is up, breaking lifetime highs recently. And so I really don't know. Gold up to 2500s, Tesla at 207s. So yeah, I really don't know. Thoughts on the S&P? SPY is up a lot, over the last week after the yen carry trade trash. Bounced right at the 200. Listen, guys, the 200 EMA really is powerful. I don't even know if it's on this. Yeah, look, it's here too. So, look at the SPY, though. So, here's the S&P. The 200 EMA is so influential, man. So, look at that bounce. Right at the 200 EMA. Beautiful bounce here. Right exactly off of it. Now, who knows if it's going to hold. Again, we got a lot of stuff going on today, tomorrow, next month. If CPI comes out higher, will that push the market down and vice versa? Usually, yes, Velo. It's never 100%. We don't know for sure. To look at it, if we want to check out a CPI inflation graph. Yeah, so I'll give you a CPI inflation graph. Tesla's trying to push up. It's at 207s. So Apple is also up a lot. Here's Apple. Apple at 221s. All right, so inflation has gotten better, right? So we're looking at this since late last year, if we expand this, right? So here is, sorry, I know the music might cut out. I'm gonna have to do this real quick and then fix it. There we go. All right, but yeah, so here's the CPI inflation graph, guys. So we're just checking this out. I wish there's a way to, let me shrink this. Let me get this out of the way. There we go. All right. Yeah, guys. So again, here's CPI inflation. Core CPI is blue, right? A little bit more looked at version of CPI. Base CPI is red. You can see, the past year straight, going back to September of 2023, we were at over 8%. For CPI, this is massive spikes. Were we that high? Let me see. Hold on. I know I can look at just the Bureau of Labor Statistics graph. Here's the actual Fed's graph here. Were we really that high in September of 23? No. Then where the heck is it? Where are they getting this data from? Okay, hold on, dude. Yeah, CPI data is not nearly this high. Why? I mean, let me quit. CPI in September of last year was, they're looking at year over year, right? CPI September of last year was 3.7%. No? Let's see it. So why the heck do you have it at 9% for the same period? I'm yelling at AI right now. You're absolutely right. My previous graph. Get it together, AI. Get it together. Here's the real CPI inflation graph. All right. So again, here's what happened. Here's economics. All right. June 2020, pandemic hits, recession hits, people panic. The Fed stimulates the economy not only through rate cuts, they lower the federal funds rate, unlocking cheap access to money, but they print money as well with quantitative easing and stimulus checks. And because of that, what happens following that? Everybody starts spending massively and inflation spikes up to almost 10% in late of 2022. Mid to late 2022, inflation spikes up to almost 10%. Again, everybody's spending money. They've got cheap access to lending. Interest rates are low. Businesses rebound and inflation spikes, right? Then the Fed pivots, and I go over this every day because it's important to understand economics, right? Then the Fed pivots, the central bank, the Fed pivots to a more what's called a hawkish stance, a more restrictive stance. They're less worried about stimulating the economy and they're more worried about bringing inflation down because of inflation spiking up to almost 10% here. And so what they do is they start doing the other thing. They start raising the federal funds rate. You know, you see a lot of people that don't understand what the words rate hike means. Rate hike means you are raising the federal funds rate. You see a lot of people universally call it rate hikes. You can tell they don't understand economics. They're just trying to piggyback off of what's popular. But you probably want to watch somebody that knows what a rate hike is. You know, that's all I'm saying out there. Anyways, so the federal fund starts doing rate hikes here to try to bring inflation down. And it works. You know, they also start pivoting away from money printing to a more restrictive stance in that regard, economics wise. And they start doing quantitative tightening. They reduce their balance sheet. They start letting their current bond holdings mature and run off, and they take liquidity away from those markets. The consequence is banks keep interest rates high for consumers, and eventually we start to see inflation trickle down. You know, so for the last few years, though, we've really been flat inflation-wise. We've been going up and down, up and down. We're a little bit lower here, but this is the movement we've had since 2023. We've basically been flat inflation-wise. The Fed actually uses PCE data, but the question is, what does today's data show? You know, this is CPI inflation. Today they're expecting, I think, 3% for year-over-year inflation, so they're expecting it somewhere around here. You know, if we pull up the actual graph, they're expecting this to stay flat month to month. So again, we'll see what this looks like. Give me your last-minute predictions on what this will do, and yeah, let me fix this. All right, let me catch back up in the chat. Inflation is stuck. And last amount of 2%. Sell gold. I don't know how to trade stocks yet. What are this week's Powerball numbers? I'm from the future. Sell gold. Fed gonna cut regardless, Steve, because job numbers are weakening. 100%. I think they're gonna cut no matter what, unless inflation spikes up a huge amount, right? If you watch the Fed meetings, we covered it a couple weeks ago. Powell seemed very dovish to me in terms of monetary policy, right? Like, I think he's gonna cut rates next month. You know, but who knows? Maybe he does. Maybe he doesn't. Here's the SPY. There's Apple. There's Nvidia. You can see Tesla holding strong up here too. Tesla up there at 208 just spiked over the previous close. Let's talk about Starbucks and Chipotle. So Starbucks yesterday made a play for Chipotle CEO, and it worked. They ended up recruiting the Chipotle CEO. Now he's going to be working at Starbucks, and Chipotle basically gapped down a massive amount, down to, you know, over 12% at $48 a share, dropped from 56. Essentially rebounded all the way back up to 52s, but it's still down like 10% relative to where it was before this news came out that their CEO was leaving and joining Starbucks. And Starbucks stock on this big news report gapped up a huge amount and ran all the way up to almost $100 a share here based off of this news. And again, this news was that they were going to basically be recruiting Chipotle CEO. So that's the news for Starbucks and them, you know. All right, we are going to throw it in sub-only mode, chat. Our subscribers have been a little light lately, a little light. What is this? All right, guys. Sorry. Oh my! I'm sorry, guys. Something else just distracted me here. It's hilarious, whatever this is. Anyways, this CEO could do magic if he takes Powell's spot. Yeah. Did Pawn change his name? Oh, Super Pawn Mod. Yeah. Super CEO Pawn. No. Yeah. Super Mod Pawn. I guess that's good. No cut until the fourth quarter. I don't know. I think we cut next month. As AI takes off and replaces workers, how will the Fed stimulate growth? I don't know. Genuinely no idea. I think that's going to take time, though. I think AI will stimulate growth to a certain extent, to be honest. I think production is going to increase massively from AI. Just now, I couldn't see the chat anymore. Yeah, you got to subscribe. We put it in sub-only mode. It's a big day today, so. What do you think looks like should CPI come in softer? I think if CPI comes in low, markets are going to go up most likely. Same thing with PPI. PPI inflation data dropped at 8:30 Eastern yesterday. Universally was lower than expected, and markets went up a lot yesterday too. Helped the market for sure. But if PPI or if CPI comes in high today, it might completely pivot that movement. You say it will go up or down. I don't know. Nobody knows what's going to happen. Nobody knows what CPI is going to show up as, except for unless you're an insider, or what the reaction to said CPI is going to be. Now, in probabilities, lower CPI is better, and so that's most likely what's going to happen. If we show lower than expected, we're going to have positive reaction, most likely, but it's never a given, and you always got to wait. Do you think on a larger time frame we were on a downtrend, lower highs? Oh, it depends on what do you mean by larger time frame. So, like, if we look at a 30-minute chart, we're definitely down relative to the highs that we put in, you know, early August, or late July, early August. You know, we're definitely downtrending relative to there. But, you know, I still think we look at, like, we're moving business as usual in that regard. We're still positively trending over the last year. Yeah, we got the Jackson Hole Symposium on the 22nd through the 24th. A huge report, massive, important report. You want to pay attention to it for sure. I'm kind of jealous of the guy that traded a paperclip for a house. The only thing they don't tell you here is that, like, okay, so you got these guys that are like, oh, you could trade a paperclip for a house, and that's true, you can't. At this point in time, it's so diluted. Right? There's so many people that are trying to do this. The only way anybody's going to let you continuously get favorable and favorable trade-ups is if specifically you have a following that they can benefit from, right? Like an example of this is like, hey, if you got a following and you want people, and somebody comes up to you, or you go up to somebody and you're like, hey, I'll make a video about this trade up option, you're actually adding more to the equation. You're adding value in terms of viewership, right? And so those are the people really benefiting from trade up situations. Everybody else trying to do it without a following, you're gonna have a really tough time doing it. And so yeah, but it's a good idea. I think I like it. But yeah, at least this article got it right. He was trading fame, not objects anymore. Advertising equals leverage, 100%, right? 100%. Would it be buy the rumor, sell the news of it? It might be. Again, we'll have to wait and see. The SPY up a lot from the yen carry trade Monday, trending very neutrally leading into this report. Again, ahead of these reports, you get choppy, sideways, neutral price. Again, though, look at Tesla spiking up, though. Tesla spiking up to almost 210s this morning. Let's trade a little bit, shall we? I want to trade. Yeah, so Kathy Wood saying she sees low value opportunities among the Magnificent Seven stocks. Do you agree with her? Like, do you agree with her? I don't know, man. Do you agree? Magnificent Seven, so Apple, Amazon, Google, Microsoft. I don't know what you should buy. Nobody does. Nvidia going bonkers. Yeah, Nvidia flying up to almost 120 today too, man. Crazy movement. We got 25 minutes left. Just crazy movements. Nvidia gives you wings. Yeah, it's up to 118s. And again, Nvidia leads the whole market. That's why I said the earnings report next month, or the earnings report in a couple weeks. Nvidia earnings are on the 28th. So in exactly 2 weeks from now, Nvidia drops their earnings. Massive, massive report. Next week, we also have the Jackson Hole Symposium. Let me figure out when. So the Jackson Hole Symposium. I'm trying to see when the next report is. Let me look at the Fed calendar. All right, guys, CPI data, 30 minutes. 30 minutes left. Be ready. So on Wednesday, we also have the Fed minutes report at 2 p.m. on Wednesday. I don't see it scheduled yet. All right, so yeah, they set the dates. Yeah, so they set the dates for August 22nd through the 24th. So speech from Powell said they'll focus on, quote, reassessing the effectiveness and transmission of monetary policy. So it'll be interesting to see if we get anything good. I'm trying to figure out the best. What do you guys like better? We have this one. I figure I put myself right here. There we go. All right, hold on. There we go. Trying to make the screen better for you guys leading into CPI. Let me know. You can hear the music. You should be able to. Nvidia's not crashing. Great content, lots of data. Hey, thanks so much. What I don't get is Robinhood was at $8 to $9 a share a year ago, and she waits until it doubled at 18 to 19 to buy it. 100%. Again, the thing I always disagree with Kathy Wood in, and again, she's a multi-millionaire, so like, who cares what I say, right? The thing I always disagreed with in regards to her trading strategies is she always seemed to buy up really hyped up stocks at the climax, like pinnacle of their price. That seems like a bad investing, and if it's investing, it doesn't matter as much as long as you're holding for 20 or 30 years. But if you're swing trading or even buying or holding for a year or two, it seems like a bad move, right? Like, I'm looking for cheaper value than that. I'm looking for healthy, good companies long-term that are giving me some value, that are cheap. I don't want to buy up stocks at their pinnacle of price. I'm not trying to do that. That seems like a bad strategy. And she's always been that way. She's always traded in that way. And I've always disagreed with her and been very open about it. Some of the buys that she gets in are just hella risky. You know, especially like Robinhood right now, especially. I think Robinhood's going to be fine long term. But I don't think Robinhood is zero risk. I don't think Robinhood is necessarily low risk even in terms of investing long term. I think they've made some decisions historically that have been super risky. But, I mean, Robinhood's highs were at 25, and so there's a chance it bounces back. We'll see. Michael Saylor does that with Bitcoin. The reason is because they borrow against their assets. Yeah, that makes sense. Given the strong PPI yesterday, an amazing CPI is priced in. Anything short of that, I think we fall. I don't know. The market's tricky in that way. I definitely think some of it's priced in, but I think people are going to wait and see as well. I think tomorrow we have a gang of economic reports also. So I just think it's important to wait. You know, we can look at like Apple as well. Apple at 220s, gapping up, really strong movement. Microsoft as well up there. We got Meta climbing as well. I don't know what you should buy long-term. No idea. I can tell you what I like, but remember, I am not an investment professional. I'm not liable if you lose. You always got to make your own assessment. Trade responsibly and smart. Genuinely no idea what you should do. Hey, did you make money, Mitch? Let me see. I stopped looking at it. Let me zoom in real quick. Hey, you did get the spike up to 13s. Nice trade, brother. Nice trade, man. Mitch called that. So again, Mitch got in. He called this at when it was at like 1240s. And to be honest, I'm going to be honest, I was a little skeptical of it. But hey, it did that. Nice work. Proving me wrong here. Good job. Nice trade. Nice little 50-cent profit for Mitch. Pretty big percentage profit too, short term for this stock as well. So nice work, dude. Congrats, man. Nah, they were holding path for a long while before they dumped. Did you buy super micro? The risk is it's super low float for a microchip stock, and so especially leading into Nvidia earnings, I think it's high risk. But I think it's also down a lot. There might be some value, but I think it's risky value. NVAX. All right, guys, serve. Pump it up, man. Shout out to Mitch, man. Great trade. Honestly, really nice trade. Apple at 221s. We're looking at Microsoft up here. We're looking at Meta. We're looking at Google. Google down a little bit, but again, the big news in business is Chipotle lost their CEO to Starbucks. And Starbucks is reeling from it. Chipotle's down a little bit. What three stocks? I'm going to put gold up here on the right side. Here's gold. Gold's been breaking lifetime highs. We're definitely going to watch it in the CPI. When will Jensen sign my chest? Who the heck is... Okay. Who is that? Yeah, I don't know what you're talking about, bro. John. Hey, John. Best AI stock to buy right away. My long-term bonds trade worked out. In the event that CPI comes in higher than expected at 0.2%, what sectors or assets might see the most immediate impact? If CPI comes in higher than expected, blue chips, index funds will probably go down. We don't know for sure, Snow, but in that regard, we should probably see negative downward trending action if inflation data comes in hot, right? So high CPI is not necessarily good. It will show a stronger economy, but but consumers are paying for it. So I think it's still going to be a negative in terms of stock price. And I think all major assets will probably trend slightly down, at least if we have really high CPI. Now, if it's neutral, it's more difficult to judge. Yeah, so Dr. Jerome Powell, who are you talking about, brother? Like, you keep saying the same thing regarding some weird name, but I don't know who that is. You longing or shorting in 15 minutes? No idea. We got 15 minutes. We got 2,000 watchers right now. All right, guys. So we get Nvidia at 118s. Yeah, my clock is a little bit fast. I always try to make it fast. I'd rather it be faster than later, you know. I'm ready too. You guys ready? My daily entertainment consists of John telling people he's not going to argue with them. Dude, I'm not going to argue with you, Bill. Stop it. All right. I just wired half my savings into my trading account. Hey, good luck, Raven. Can they still favor their own direction regardless of data? Sure, anything can move anyway. Nobody knows. We'll have to wait and see. We can look at probabilities, and probabilities are low inflation. CPI data is going to cause positive reactions in markets, but a negative reaction in the dollar, and vice versa. Higher CPI data will probably cause negative reactions in stocks and broad markets and index funds and gold, but positive reactions in the dollar, right? That's pretty probable, but nothing's 100% or definitive. I always try to be honest about that. I mean, I can get the timer exactly right. You know what? I'm going to. Okay. All right, we're at 12:50. All right, we got this. We should be at 1710. It should be 1710. We're ready, guys. Here. We're going to press play exactly when, just so you can guys have the closest, you know. Be ready. All right, guys, ready? All right, that's about as accurate as I can get it. All right. Boom. You're welcome. Stop arguing with me, Bill. No, I'm just messing with you, bro. I'm new in trading. When inflation is high, does gold go high? Typically, gold follows a macro market sense, where gold's going to follow the S&P or the NASDAQ. Whatever the S&P and NASDAQ do, most of the time, gold short-term follows it, although it's a different animal long-term. Why does this happen an hour before market open? Because pre-market is designed, right? Like, a lot of people question what pre-market is for. Again, pre-market is specifically designed for news to come out during it, right? So, like, news is supposed to drop in pre-market because during volatile market hours, it'll be worse, if that makes sense, right? So, pre-market is designed for news to come out during slower periods of the day, right? Same thing, extended hours in general. That's why earnings come out either in pre-market or after hours. CPI reports, PPI reports, jobless claims reports, they all come out in pre-market early, where there's less volatility. So P says, how important is that attack be for markets? It'll be really relevant for oil and other stuff, but that's going to take time. Will a bad reading make the market go down? Yes. Most likely. You don't know for sure. Where's GameStop at? People keep mentioning GameStop today. Is it moving? It's up to 22. What about AMC? AMC's over 5s. That's great. If it comes in dovish, under 3% and 2% Bitcoin is going to fly, maybe. Yeah, under 2.9% is pretty optimistic, I think. But it could happen. I mean, I think you got to look at it under the lens of the last CPI report showed up negative, right? So the last CPI report was expected, I believe, at 0.2. They ended up showing minus 0.1%, which is when the Fed started pivoting to more of a rate cut expectation in September. Now they're expecting 0.2%. It's a lot less likely. I think we're either going to show up as expected or 0.1% higher than expected at maybe like 0.3%, maybe 0.2% or 0.3% is what I think we're going to show up as month to month for CPI. Now, I might be wrong. Nobody knows. That's my guess. I think we're going to show up at 0.2% most likely today. Again, straight up guess. No idea if I'm right or not. We'll see. But again, when I predict CPI, I use a balanced strategy, and so we'll see. All right, guys, we got about 2,500 watchers right now. Thanks so much. Don't forget to hit the subscribe button, guys. Yeah, we got 10 minutes. Hit the live button next to the play button. Make sure you're fully caught up on stream. I appreciate the love. Thanks so much. We'll see if we get anything good. How long until CPI? We got a big old timer right there. In this, like a weatherman, in this area right here, we've got a timer. In this, right here. Aquí. People who are scared are the ones who will lose money? Yeah, I mean, the biggest losers in any market condition is people who get nervous and sell during crashes, right? People who dollar cost average into crashes usually, are okay. People who buy the dips and crashes make out like bandits and do really, really well. So, again, the people who lose the most are people who get scared and sell everything. I'm not saying you should never sell anything. What I'm saying is that if you're holding long term, you have to understand you're going to face crashes. You're going to face corrections. You're going to face bear markets. It's normal. It's inevitable if you're in the market long enough that you're going to face those things. And so the way to hedge against that is just long-term holding, right? Regardless, the S&P 500 will give you 10% on average, 8, 9, 10% a year on average, regardless of anything, including crashes, right? Including corrections, including bear markets, 10%, 9% on average for the S&P or the NASDAQ, right? And so what that means, I've always said this, I'll say it again, what that means is that on good years, you're going to make much more than 9%, 10% a year in equities, right? And a good example of this is last year we did 24% in the S&P 500, 24%. Crazy gains. if you took advantage of it last year. And so, yeah, the way to beat the market is hold long term. That's the way, you know. I mean, we day trade. We love day trading. We swing trade. We invest. We buy bonds. We buy real estate. You know, we diversify. But, you know, long term is the edge. Most guaranteed edge, at least. Except for maybe bonds. Bonds are absolutely guaranteed. Stock prices, if you hold it long enough, you're going to make money. But, you know, you might have to hold it 10, 20 years. But you're going to make money if you're patient. I can't guarantee anything, though. Not an investment professional. Always remember, I'm one of the top 3 most biased traders of all time ever in the world. You're not going to see my trades. I do trade off stream all the time. I mean, you're going to see some of my trades, but I do trade off stream. I don't even claim to be a good trader. I'm definitely not an investment professional. I'm definitely not liable if you lose money. And, yeah, be smart. So we're looking at gold. The SPY turning all the way back down. It's been pretty choppy leading into this report, but it is going back down under the 200 EMA, under the volume weighted average price. It's starting to test the previous close right here at about 542s. It is starting to test that level. Nvidia dipping all the way down to the volume weighted average price as well. Mostly choppy, but had a pretty big bullish run over the last few days. All right, guys, we got 7 minutes left, almost exactly 7 minutes left. What's your last minute predictions? I'm going to go with 0.2% or 0.3%. I really enjoy the top 3 running gag. You'd be surprised at how many people don't understand it. They're like, why are you always telling people you're a bad trader? Why are you always telling people, you know, why are you always telling people that you're great at everything, John? You must be a narcissist. It's like, dude, it's obvious sarcasm. You know, they say one of the truest tests to see if you're like have a healthy mind is whether you can understand sarcasm, you know. And so top 3 healthiest minds in the world right now. Market Bitcoin. Yeah, we're looking at Bitcoin. Bitcoin at 62s almost, 6160s. So moving up there. It's bullish on the day, but again, it moves in a macro sense with markets. A lot. Dude, you don't know how many people have asked me, hey, are you really top 3? Is it actually top 3? Love you. Have a good day at school. Borderline trader disorder. Yeah. All right, anybody that asks if they should buy or sell gold, I'm just going to put them in timeout. Sit in the corner. Think about what you've done, sir. Look at Tesla bouncing right at the previous close. You know, again, I've got 3 indicators I talk about regularly. Short term, at least. And long term for some of them. They got the 200 EMA. You can see the bounces. If you look at long term, you can see that. Look at Nvidia bouncing directly off of the 200 EMA and the VWAP level right there. And then we also have the previous closing price. This light blue level here, light blue level here, light blue level here, right? These are the big 3 milestone levels that people watch on a regular basis outside of like pre-market highs. You know, pre-market highs are another example of this. Those are 3 things that I'm always watching. I'm kind of a purist in charts. You see some people put up charts and it looks like a freaking NASA, you know, screen. That's too cloudy. Like, there's not enough stuff. Yes? All right, guys. So, buy Lyft. I don't trust Lyft as a company. I think Lyft is risky. Lyft up to 1001s. Tesla at 208s. All right, guys. We got 4 minutes left. 4 minutes before CPI inflation data. We got 3,600 people here live. You guys ready? Silver's the only good and yep. CPI at 7.9%. No way it's never going to come in that level. It's never going to come in anywhere close to that. It's expected at 3% year over year, month over month expected at 0.2%. I think it's going to show up as expected or a little bit higher, but I might be wrong. Could show up a little bit lower. I think that's reasonable too. I don't think it's going to show up severely higher or lower than anything. Again, the nuance of today's report is Powell said they're probably going to cut rates next month, I think. the only way he would go against that, I think, is if inflation data spikes, right? If inflation comes in way higher than expected, that's a different animal, a different story completely, and that's the risks of the market. If Powell sees high inflation spikes over the coming month or so, he might not cut rates next month, right? And that'll change economics in general looking out in the country. So we'll see what happens. That's the big thing to watch for this report. Does inflation spike? I don't think it does. I think it stays the same roughly. But again, it's just a straight up guess. I have no idea what I'm talking about, and I might be wildly wrong about everything. Don't copy me. Top 3 worst trader of all time and best trader simultaneously. If it comes in hot, be prepared. Yeah, hot will probably mean the markets go down, I'm guessing here, right? Like, we don't know for sure, but higher inflation data is generally worse. It does mean a slightly stronger economy, which some people might see more optimistically, but again, generally speaking, high inflation is bad, you know? And so if it comes in high, it's not good. Look at the SPY spike all the way back up to 242s. You know, I have this trading strategy leading into these big economic reports. You know, everybody wants to trade breakouts and range breaks and, you know, volatility. I like to trade chop. You know, I have no qualms about buying the bottom of a really choppy range ahead of big economic reports, because almost always we're going to go like this, right? And so I short the top, I buy the bottom. I have no problems with that leading into it. It's not the most exciting trading strategy, but I think it has a high edge if you're patient. Especially works well during FOMC meetings and stuff like that. You also have really easy exits. If it does break the range, okay, get out. You know, really simple. All right, guys, here we go. We got about 5,000 people watching. We got a minute and a half left. Chat, a minute and a half left. I'm going to have to get a drum roll out here. You guys ready? What's your last minute predictions? 0.1% people are saying. 0.1%. I'm going to go with 0.2%, 0.3%. Please pump, no dump. Yeah, dude, I'm talking about CPI inflation. I'm not talking about anything else right now. CPI comes out in 1 minute. 3.1%, 0.24%, 3.3%, 0.2%, 0.2%, 1%, 2.8, 0.1. All right, guys, here we go. Prepare yourselves, chat. We got less than a minute. Less than a minute. 0.2% expected month over month, 3% expected year over year. 20 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream, chat. Make sure you're fully caught up on stream. Hit the live button next to the play button. 20 seconds. About 10 seconds left. 10, 9, 8, 7, 6. This is a little bit early. 5, 4, 3. We still got about 5 minutes. Or 5 seconds. Here, so I'm going to pause this. All right, here we go. Here's the report, guys. Be ready, and the report drops right now. CPI showed up at 0.2%, 2.9% as expected. I told you guys. I'm right about everything. You'll never hear the end of it. 0.2%, 2.9% year over year, so slightly lower than expected year over year reading. Core CPI showed up at, wait. Am I early? Yes, 0.2%, 2.9%. Core CPI showed up at 0.2%. Core CPI year over year showed up at 3.2%. As expected, CPI report. I think the Fed's going to cut next month, and we were right. You're welcome. Again, I'm telling you, just general balance theory for inflation data is powerful. The Fed tries to be balanced. 0.2%. Very predictable. Nvidia spiking up on this lower than expected inflation data. Year over year, everything was as expected except for CPI year over year. It showed up at 2.9%. Again, how many times have I gotten CPI report exactly right? You're welcome. Listen, y'all will never hear the end of it. Top 3 worst economic predictor of all time. SPY up to 543s. We got 6,000 people here. Thank you so much. Hit the subscribe button if you haven't already, guys. Yeah, I wonder how the rate cut expectations. This is as expected a neutral reading. Gold actually downtrending a little bit here, so interesting. The SPY it's pretty flat of a report. We had slightly better inflation data at CPI year over year. Month over month was 0.2%, as I told you. Core CPI 0.2%. Yeah, I don't know if anybody's mad. So you're saying Bears mad? I don't know. I think it's too early to say that. I think it's as expected, and so we've gone up a lot the last couple days, and so I think we might just balance, come back down a little bit. First move sometimes the wrong move, and I think we're kind of seeing that now. And so I don't think this is necessarily bullish. I think this is neutral, and I think a neutral report can do anything considering we've pushed up a lot the last few days, if that makes sense, right? So I would just be careful. John is the CPI goat. Honestly, balance theory works well for it. It really does. Like, balance theory works well. That's why I told you guys beforehand, like an hour before this report, I think it's going to come in at 0.2. And we showed up at 0.2. Yeah, all good, MB. I know, bro. It's all good. I like to troll too. But yeah, there's the turn in markets. So we're actually down a little bit on neutral CPI. So gold coming back down. Nvidia falling here. And if you haven't already, guys, check out Apex. Apex is a funded account program in futures. They are a sponsor of mine. I'm biased. They pay me money. Top 3 most biased trader of all time right now, guys. But if you want to check out Apex, it's a great way to learn how to day trade. We're about to day trade on there right now. They give you a demo. They test your skill with a demo account. If you fail, you only lose the monthly subscription. The base one is $30 a month. So it's very small risk. You're still risking something. You're still learning how to trade under pressure. You just have noticeably less risk. Most day traders put up 3, 4, 5 grand, lose it all. Like, this is very common. Almost all day traders lose money. Instead of risking thousands, try a funded account program. If you pass the base one, you get $25K in funding, 90% split. You got to make $1,500 on a $25K demo without losing $1,500 first and following their rules. It also comes with real-time data as well. So it comes with real-time data. It does allow you to trade with real-time data. If you were going to pay for that data independently, it's going to cost about the same, $30. So the value is there. 90% split once you're funded, and they pay out hundreds of millions of dollars to their traders since 2022, over 250 million since 2022. And again, in the futures market, you can basically day trade the SPY and Q price action, what we're looking at right now. And so patterns are very similar to blue chip stocks. Great way to learn how to day trade with limited risks. And I think most day traders will lose here as well, because most day traders lose, but it's a lot cheaper to lose here than it is to put up 5 grand and lose that. And again, you can get the 150, 250, and 300K packages for, again, $40, I think. So it's pretty cheap if you use my coupon code and link. Again, they are a sponsor. I'm one of the top 3 most biased traders of all times in the world. But if you want to check them out, they pay me money. I'm biased. But check them out. Here's the link. Use coupon code BT. We'll get you the max discount at all times. Check it out. There's the link. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. Anyways, now that I've done selling out and, shameless plug, we'll come back to the markets here. And the markets are completely flat on the day. SPY is right at the previous close. Gold is right at the previous close. Nvidia is slightly over the previous closing price. Initially had a positive reaction, and now we're turning back down here. Yeah, we're going to put the data up right here. Again, we showed you guys 0.2% is what we showed up as expected, 0.2% versus 0.2%. Core showed up at 0.2% versus 0.2%. Yeah. We'll put the full data release right here so you guys can see it. And get another one going here with the core data as well. Core data month over month, 0.2%. CPI year over year showed up at 2.9%. The real reason the market initially reacted positively is because year over year data showed up at a little bit better than expected. There's the full report right there. So I might buy this dip, honestly, because I don't think the data was bad. I think we're just correcting a little bit from extension on the upside. But who knows? Nobody knows. I have no idea what we're going to get here. I hope we get positive action, but nobody freaking knows. All right, so we'll try to buy this dip. We have a 50K funded account here we'll play with. We did make money yesterday. We made a couple $100. We'll try to play with this today. I wanted to buy the dip, guys, and we're just a little bit late. So again, there's one contract. We're gonna trade small, try to build up a cushion here into this. Take 2 contracts here. Maybe take 3. There we go. Now we're dumping down a little bit. Game of patience here. I think we'll probably rebound back up, but who knows? There's the bounce back. Kind of flat on the day. Nvidia back up. Yeah, I'm definitely not going to add to this, so I'll probably keep it pretty tight. But again, this is the futures market. I'm basically day trading the QQQ price action in futures, which there's no PDT rule. I can do it. Patience. There's Nvidia spike. There we go. All right. I'm going to buy this actually again. Take another piece off here. We're up about 60 on the day. Just kind of scalping this move. We'll go ahead and cut that. So we're up about $100 on our first trade. A little bit less, but that's okay. We're trying to build in that cushion. Again, we had the thought process of we overreacted short term to price action and we came back down a little bit. And so we wanted to buy that up and that worked. Smaller gain, but that's okay. We'll just keep kind of piggybacking off of these big moves to the downside and see if we can get it. We're back over some of these levels. Nvidia spiking up to 118s. Data seems good. I wouldn't say it's good. I'd say it's neutral is what it is. You know, we had one metric that was lower at 2.9% for the year-over-year base CPI report, but I don't think that's good enough to cause like a big bull run. I think it's good in terms of rate cuts. If you want a rate cut, this is good because this means, you know, the one exception to the rate cut, or the one exception to Powell's plans to cut rates next month would be if inflation spiked up. And now we still have, when's the next PCE report? We still have another PCE report coming out ahead of the next rate decision. So in that regard, it's still like up in the air still. It's not 100% like ready, but still like, yeah, we'll have to wait. All right. Inflation is still increasing just at a slower pace. Correct. So inflation doesn't actually go down. Very rarely is inflation going to literally go down. The best we can hope for is to slow it down. And the Fed's target is 2%. Right. So 2% inflation is reasonable inflation. Right. Especially, again, if we look at a CPI inflation graph. Right. So if you look at a CPI. If we look at a CPI inflation graph, we did get, so we came in at 2.9% for July. So they already updated it here, right? But the Fed wants 2%. And when they say 2%, they're really talking about PCE data, right? So if we look at a PCE graph, core PCE is the most important one. Let me see if I can find like a good, like, yeah, here's a PCE graph. Here's a chain index. Here. Yeah, so here, again, here's a chain index. I'm trying to find a regular graph for PCE. Hold on. So inflation will go down, but it's usually only in recessions or depressions, right? So if you look at CPI, a good example of this, right? And CPI is my favorite graph in this regard because you can actually see people are unhappy about price, right? But prices are not going to go down. The best we can do is get them to stabilize. The only time prices actually go down, like this is a 20-year chart. The only time that prices have actually gone literally down is 2008. Right, 2008 prices went down because we had the mortgage disaster of 2008 and the recession that we faced from it. But even still, they didn't go down for long, and they eventually rebounded right back up. You know, the Fed is actually trying to qualm this data here instead now. So you know. All right, the SPY at 542s, almost 543, so it's coming back up. The data is neutral for the most part, Jackson. So it's mostly neutral, brother. Gold, I think, had a negative reaction to this report, although it might have bounced back. Let me see. Yeah, so gold is completely flat from this report, completely neutral. What a month, dude. Yeah, honestly, it's a crazy month, honestly. We had the yen carry trade Monday. We have all this stuff going on. Markets have essentially rebounded a lot. It's looking more like we're going to start cutting rates next month. And I don't know, man. I don't know. We'll see. There's some implications on like real estate, interest, mortgages, loans in general. And if the Fed starts to cut within, a year, we're going to start to get lower interest rates everywhere, universally, mortgages, auto loans, all that stuff. And so, yeah, we'll see what happens. It'll be really interesting to see. Yeah, I mean, paper hands, listen, if I've never seen you before and you're just looking for things to complain about, which is, you're probably just a troll trying to complain. So, again, I'm just going to put you in timeout, and if it keeps up, I'm just going to ban you. And I'm sure we're going to see some other guy with another username saying, like y'all will be okay if I type something on my phone for 20 seconds. You'll live. Inflation is down, bro. The report was 0.17. They rounded up to 0.2%. Sure. I mean, they always round it, Joe. But yeah, we could say it's bullish. It's definitely not super bearish inflation-wise, right? How did the dollar react? I'm assuming the Dixie reacted negatively. It's one of the reasons I bought this dip is because I do think it's a little bit more bullish than bearish. Right, I don't think it's bad at all. I think it's more neutral, though. Dollar index is completely flat. Honestly, John, you probably save me time and make me money frequently. I trade most of these large data releases, and I prefer to hear it from you rather than look myself these days. Well, I'm going to cover it faster anyway most of the time. Right, I'm also going to explain the nuances of it. And again, lately I've been getting it right, predicting-wise, like predicting what CPI is going to show up as. And so... and again, I use a general. You want to know how I do it? I use balance theory. with predicting these, And again, anybody that has been watching my stream for like a year knows how many of these I've gotten exactly right, which is very difficult to do. But balance theory works. Hey, thank you, Joseph. How you interpret the data and current situation for Bitcoin? I think Bitcoin's been ranging for a long time now, for like a year straight. And so I'm just waiting for it to break out of that range. If you look at Bitcoin's chart, Nvidia's starting to push up. If you look at Bitcoin's chart, for a year straight, Bitcoin's basically been in that range. It's been slightly downtrending. Do you mind explaining? Oh no, I've lost all my rent money. Well, sorry to hear that, bro. You're probably trading too large if you're trading with your rent money, dude. I'll take good, but I don't need my money sitting in a bad economy. Yeah. What's the results? So the results are right below me. They came in at 0.2% versus 0.2% expected. We got this little dip here. I guess I'm going to buy this dip with one contract. And then maybe I'll add to it here, 2 contracts. See if we get a quick little surge that I can take profit in. But we got a cushion here. All right, guys, we're waiting here. We're waiting. We're bullish today. I think we're we don't know for sure. Market's starting to turn all the way back down here. Like, I still think we're gonna go up. I could probably hold this long enough. I could also add to this, but it's just too much risk to do so, I think. So yeah, I'm just gonna cut this. So we lost some of it. Again, I think there's a chance, like, the data was neutral. So I think there's a chance we look like this. Right, where we go up and then back down and then maybe up and then trend, and then whatever happens at the open, we'll do whatever. But there's a chance that we just trend choppy and neutral as well. Like, there's a big chance that that's what happens. So I think we just got to be patient and wait. Palantir. Yeah, Palantir has had a crazy big run. I'll start to buy this. I like the downward pressure here. So we'll trade with some of the profit that we've made and then actually add to a more balanced trade. There we go. We'll cut it. Take another little piece off. Figure out what we want to do with the rest, whether we want to add with it or expect this to retrace some. All right, so we're back up to 60. We basically made most of our money back. We've had 3 trades, 2 green, 1 red. Yeah, my daughter and I have a running joke. One time Poseidon, I pronounced it. I pronounced it wrong. I pronounced it like I pronounced it like Poseidon or something like that. And so my daughter corrected me, and I would just start trolling my daughter. So every time I would say it, she had to do like a book report on it. I would call it something else. I would say like Poseidon, you know. Posy D, you know, like, and my daughter hated it, you know. Yeah, I don't know options super well. That's bad advice. People can and should invest whatever they can spare. Saving for 6 months won't help. Yeah, I'm trying to see you should not be trading investing unless you have at least 6 months of expenses saved up before you invest a penny. Absolutely true, Sassafras. Yeah, no offense to Angelique, but Angelique, if you think he's wrong about that, you should not be trading, right? Like, the real problem is this, right? I think you have people really susceptible to marketing. And so if you're selling a course on penny stocks, you know, what are you going to do? You're going to try to make new rookie traders think that you could just take $1,000 and roll it into 6K and then take that money and roll it into this and find financial freedom. Yeah. But like, the reality is you're probably going to lose money. Like, you shouldn't be day trading unless you have savings. 100%. You shouldn't be day trading unless you have consistent income and savings. You know why? Because you're not going to be able to, like, that's a dream. Everybody wants to dream that they're going to take 5K and turn it into 20K and be some type of savant, like, trader prodigy. But nobody turns out that way. Almost all day traders lose money. You know, investing's great. Investing has a very high probability of winning, but short term it's volatile and anything can ultimately happen. And so you should be saving money. Sure, 100%. You need to have money saved. Almost all day traders are going to lose. It doesn't matter what course you take, who you follow. Almost all day traders are going to lose. This is not controversial to even say. This is very obvious. And so if you don't have savings, like, the problem with day trading, if you're trying to day trade with your rent money or invest with your rent money or, you know, swing trade with your rent money, the problem is that you're going to have so much pressure on you to make money. It's going to completely ruin any trade bias you have, right? You're going to be so biased. You're going to want things to go up because you're going to need an edge because you got to make money. If you got to make your rent money, it's the worst thing you could ever do. It's a rookie mindset, to be honest. Like, new traders generally should have savings. They should be comfortable financially. If they're not, it's going to be way worse. Emotionally, trading wise, strategy wise, it's just going to be completely ruined. Like, you have to have enough objectivity to be able to say, hey, I don't need to take this trade right now. I can wait. You have to be able to wait. And if you don't have any money, you're not going to be able to wait. You know, so absolutely right. You need to save money, have money, be financially comfortable. Day trading is a luxury of somebody financially comfortable. The real problem is that you got a bunch of gurus that want to sell you courses, right? And if they said, hey, this course isn't going to get you rich right now, nobody would buy it, right? So what do? They say, oh, you can get rich. Buy my mentorship program. Most of it's nonsense, you know. Coming from the top 3 worst trader of all time ever. Yeah, I'm catching back up with the chat. And listen, Jaspreet Singh is great. He really is, Angelique. I like Jaspreet too. He's actually been on my show a long time ago, believe it or not. So he came on my stream like years ago. And so I like Jaspreet. And he's a big believer in investing, and 100%, you know. as long as it's not day trading, it's probably fine. As long as you have money to pay your rent, you just got to make sure you got a priority set. I think everybody should have a base amount of savings first. And if you're not talking about day trading, it's a little bit different. I thought you were talking about day trading, but yeah. Save your money at first. Right, 100%. G. I think that's probably a good plan. I'd say save like 6 months of expenses, learn it slowly, go for some funded challenges if you want to day trade. If you pass those, then start trading slowly from there. 100%. You give great advice. We try, brother. We try. Yeah, I mean, Guy and Van, I'm not sure why you keep saying the same thing, man, over and over again, like really trying to target my sponsorships. Friendly warning, please stop. Thank you, sir. Yeah, I love Limitless, the movie, you know. But again, the Limitless guy had all his... the Limitless dude had all his potential unlocked. You know, everybody else ain't like that. You know. Alright, guys. We'll see what the opening bell gives us here. My Nana has her life savings in Sherwin-Williams. I mean... Boomer's gonna boom. You know. Listen, it's all good. I'm not even... Like, my dad's a boomer. Pretty smart guy, actually, investing-wise. Like, my dad had some great investments looking back as a kid. So when I was a kid, right? And my dad, we weren't rich at all. Yeah, Top Step's still great, Don. They're dope. I like Top Step. I don't really know. But no, so when my dad, the house I lived in when I was like a kid, right? Was this rundown, like beat down house. It was old. It was from like the 1910s or 1920s. But my dad bought it because my dad was a falconer, right? And it had some land that came with it. So it was kind of like a really beat up house on some land, right? And this is in Baton Rouge, Louisiana, right? Because we used to go hunt the hawks there at the land that he bought. But the house was beaten down, broken down, you know. Over time, that area developed into business suites. Right, like higher scale business suites, like attorneys' offices, like doctors' offices, and stuff like that. And so they kept trying to come to my dad and been like, "Hey, we'll give you $200,000 for this property," which was much more than he paid for it. I think he told me he paid like $90K for it back in the 90s, you know. And so the developers kept coming into him being like, "Hey, you know, we'll buy this land from you," because they wanted to develop it into those business suites. And he kept rejecting them my whole life, right? He was super patient, rejecting them my whole life, rejecting them. And everybody else, all of our neighbors were selling those, like their houses so that they could develop into business suites. My dad waited the longest he could until he was like the only house left. And he had like 3 or 4 acres back there, you know, of wooded area, like straight woods. I still feel bad. Eventually, by the time I was an adult, right? This was well past when I was an adult and I had moved out of home and like everything else. So I didn't even live there anymore. By the time he finally sold it, I didn't even live there anymore. I was an adult, like doing college stuff or whatever. And he made a bunch of money from it, you know, over time. So, you know, shout out to my dad. Smart dude. You know. Yeah, I look a lot like my dad too. If you want to see my dad here, check him out. I show this picture sometimes, but no, that's me right here. You know, as I grow older, I look a lot like him for sure. Yeah, my dad was the original diamond hands with property for sure. You know, just a smart guy. I'm still kind of bummed out he sold the land, though, because it was, you know, woods are almost getting taken out of Baton Rouge completely. But yeah, he waited, you know. A hockey fan? I kind of was a hockey fan. I played Pee Wee ice hockey when I was a kid. Was horrible at it, absolutely horrible. But I learned to ice skate, and so I could ice skate. I used to watch it. I don't really watch it much anymore. All right, SPY testing highs, moving all the way back up here. No, not that. We weren't that weird, Tony. Yeah, I played hockey in Louisiana as a kid, which was like a rarity, I would say, you know. You're back from your timeout, Guy and Van. Hey, listen. You know. NASDAQ looks like it wants to break out again. Yeah, the SPY, the NASDAQ both running up. I do want to look at Nvidia, though. Bitcoin up to these levels here. We'll see if they hold, you know. Yeah. Welcome home, you know. This guy in Van have candy. Maybe he might, you know. Micron MU, is MU really up? MU up to 100. I'm from Baton Rouge and I ice skated also. I was on the Pee Wee Kingfish. I don't know if it was the Pee Wee, right? Like somebody I grew up with in elementary school's dad was the coach or something. I can't remember what his name was, or what his dad's name was. But all my friends were playing, and like me having never really ice skated. I used to play hockey rollerblading as a kid in like my school parking lots, and we'd get in like fights and stuff, you know. Pretend fights, kind of pretend. Sometimes we went at it, but yeah, I was terrible at hockey. I'm pretty sure everybody hated me too because I was just not good. I also had like ADHD, and so yeah, I'm sure they thought I was like freaking weird. I probably was weird, to be honest. You know, you don't really mature socially until you hit like 6th grade, 7th grade. That's what I tell my son. All right, so again, we've got this little range here. We're testing the top of it, going back to trading. Small green day, 25 minutes left. I'm watching this level right here. We've tested it 3 times now. Nvidia currently sitting at 118, it's almost 119, steady pushing up. I'll put the SPY up here too. It's not about pitching my business. It's about like saying anything over and over and over again. Like I try to limit amount of plugs I do every day. I don't want to do 1,000 plugs. I only want to do a couple for anything, right? And so if somebody's kind of like, you know, I try to limit it because the more you plug, the less people tune in. So like plugging it over and over again, yeah, just, you know. SPY at 543 started to test these highs up here. NASDAQ's following it up as well. I mean, I'm sure you could have up to 20, I think, Mob is what you can have, 20. Again, if you want to check it out. There's the link. You can use coupon code BT. Speaking of plugs, there's the link. You want to check out Apex. you're so upfront. I try to be honest with people. I tell people I'm biased. I tell people they pay me money. I tell people that I'm, not an expert. I just try to be honest. I try to be how I would want to watch. If I watch somebody, I'd like them to be honest. I mean, I'm here to make money, and anybody doing this and streaming for hours and hours every day is doing so to make money, like without question. They can pretend like they're creating schools and doing it out of the kindness of their heart. They're here to make money, and again, there's nothing wrong with that. Like, it's a business. I provide a service. I cover economic reports. I explain markets. I cover stock price movement, and we trade live. We let people watch it. We tell people the truth as much as we can. And so we provide a service, and everything's free. I don't sell a course, don't sell a service, don't claim to be an expert. And we provide value. So just try to build it. Top 3 greatest channel of all time ever in the world. So the inflation report was neutral. It was flat. We came in slightly better than expected year over year for CPI inflation, but everything else was flat. So initially we reacted positively. We went down a little bit. Now we're back up a little bit. So kind of a flat reaction as well, a neutral reaction, I would say. The opening bell is going to unlock the real volatility from this report. So it's just kind of a wait and see situation now. Yeah, I'm not going to go over too much in that regard, Don. Like, I'm friendly with both companies. And so, in that regard, I'm just not really going to go too deep into that right now, What are the things you teach your kids to be more financially literate? I teach them patience. I teach them that gambling doesn't get you anything. That, like, being addicted to the butterflies in your stomach, there's a lot better things that'll give you butterflies in your stomach that don't require you losing money. And that you got a lot of people that are literally addicted to losing. They're addicted to losing money. They get butterflies in their stomach when they risk money. Cause gamblers is one of the hardest ones to tell people, that, like, hey, most gamblers lose money and they're addicted to losing money and it's never fun. Tell them to just save, invest, wait. Patience is king, I try to teach my kids a lot of stuff. I try to expose my kids to the world in terms of, like, movies. I think if you're too restrictive for movies, then your kids are going to grow up and they're not going to be balanced people. Like, the people who are generally the weirdest as they get older are the people that were the most sheltered from specific things. And so what happens is that they get older and they become absolutely obsessed over whatever they were sheltered from heavily. And that can cause really unhealthy situations. And so, like, we try to expose kids to the world in that way, but also kind of keep it, it's not too crazy, like, we still shelter them, of course, but, like, we try to keep it a little bit more balanced than others who might just shelter them from everything. They've got to understand life, and life is sometimes hard, life is sometimes difficult, life is sometimes crazy. You got to understand it. Again, as I said the other day, it's all about empathy. I want my kids to have empathy. Empathy means that you're not a psychopath, you're not a sociopath, you're not a narcissist, So I just want my kids to be empathetic as much as they can. And I think in order to make your kids empathetic, you have to be empathetic towards them in a lot of ways. So parenting will change you as a person. I think I was really selfish and dumb before I had kids. Once you have kids, you start thinking for somebody else other than yourself. And I think it just makes you grow as a person. Anyways, back to stocks. We got 20 minutes. So fold ace king pre-flop. Well, usually no. Usually you're not going to fold. The only way you should fold is if you have, like, a multi-way pot and you get multiple 3-bets from your opponents. So, like, 4 people in the pot, all of them 3-betting. 4-betting. In that situation, you probably want to fold ace king. Outside of that, you probably want to run with it, depending on ICM implications. But it's certainly really nuanced in poker. There's that lack of empathy. Yeah, empathy's important. Warren Buffett installed a slot machine in his house for his kids and then made the payout rate terrible. Great idea, honestly. Show them. It's not fun. All right, SPY at 540s. Good message on empathy. 100%. You know, like I see some parents, like, you know, you gotta, like, I don't know. I grew up like my love language is like affection and physical touch, right? And that's because my parents were like that towards me. And I think, you know, especially moms, they have to love their kids. They gotta hug their kids. They gotta make them feel good, you know. Without that, it's kind of tough, I think, you know. But it's you know, nature versus nurture. Yeah, so CPI came in flat, which I think is great for rate cut expectations. I think we're still going to have one CPI report coming out. I think we're going to have one CPI report dropping before the next FOMC decision. I'm trying to see when the next FOMC decision is. So we got the Fed minutes report next week. We also have the Jackson Hole Symposium next week. In 2 weeks, we got Nvidia earnings. Okay, so the next FOMC meeting is on the 18th, so we will have one CPI report prior to that. So we're going to have another CPI report September, the first 2 weeks into September. We're going to have another CPI report, and then 4 days later, we're going to have the FOMC meeting. We're also going to have the PCE report, which I'm trying to see when that is. You know, I think it's going to be at the end of this month is typically when they hold the PCE report. Let me check. So I don't think it's next week. I think it'll probably be the last week of this month. Yeah, so, okay, so yeah, the PCE report comes out August 30th. So Friday, August 30th, we get PCE data. That's actually the Fed's preferred inflation metric. And the reason we're watching inflation is because Powell alluded to rate cuts next month if inflation stays stable, right? Stability is key. And so if PCE comes in neutral, even slightly higher than expected, it's fine. As long as it doesn't spike up massively higher than expected. Same thing with the CPI report next month as well. As long as it doesn't come in massively worse, massively higher than expected, I think we're going to cut rates in September. You know, but there's still time and things could certainly change. You never know. Again, nothing's definitive. So we'll have to just wait it out. Yeah, J Powell live at the hole, 100%. I mean, I think people are different, though. I think, you know, I can also respect people that choose not to have kids out of, you know, understanding themselves and understanding. Like, I can respect that, too. I think everybody's different, you know. I personally wouldn't want to go through life without kids, but people are different, you know. Nvidia earnings, yeah. So Nvidia earnings exactly in 2 weeks. I would say this is like the Super Bowl of the stock market, to be honest. Massive report, incredibly important report that you want to watch. You know, again, Nvidia earnings in 2 weeks, huge report. Y'all do me a favor, hit the subscribe button, guys. Hit the notification bell. We're pushing towards 150K. I think by Nvidia earnings, we're going to have close to 150K. I'm at least putting that out there in the world. Again, the last Nvidia earnings, we had 10,000 plus viewers. The one before that, we had almost 100,000 total viewers. We had 14,000 simultaneous viewers there too. So you know, you got this whole thing preached about be a Sigma male or whatever it is, right? My issue with it is that, like, most of the people pushing, like, hey, be a Sigma are the least stoic people I've ever met, right? They're always, they get super upset really, really easily. And they're the least stoic people I've ever met, right? Like, I could go around yelling at people, lashing out at people, and then call myself a stoic. But that's not true at all. And so I don't know. I think people want to be that, but I don't know. I think it's just marketing. Anyways, we're coming back down a little bit. I might buy this dip leading into the opening bell. We still got 15 minutes. I'm gonna add to this here. See if we get a little pop. Take 3 contracts. There we go. We'll hold our 2 contracts. Maybe add some more. Where's my music at? There it is. Take a little piece off. All right, we're up about $100. So we've had like 5 trades. We've only lost on about 1 of them. So our accuracy rate's pretty solid today, all things considered. Let me exit out of some of this stuff. Yeah, so looking at rate cut expectations here. Speaking of that. So 25 basis point is what's expected right now. It looks like almost 60% of people think we're going to get a 20 BP cut. What do you guys think? How much do you think we'll cut rates next month? Is a good question. Like, how much do you think we're going to cut? Yeah, you see those expectations. 25, 25. Yeah, I think 25 is probably, I'm not mad if it's 25. If it starts to get 50, 75, I'm not going to be mad. But I hope it's not. I'm in my 40s, divorced, and didn't have kids with the ex because we had a bad split. Older I get, the more I realize I'm likely going through life without children. I don't know, brother. It depends on how, your 40s are still relatively young. I have 2 cousins that just had kids at like 43. Female cousins that just had babies at 43. So, I mean, with modern medicine, you're still good. You just got to figure out how bad you want them. If you really want kids, you could adopt or do whatever. And that's fulfilling in its own way, too, It's a beautiful thing, bro. It's a beautiful thing. But again, everybody's different. People are different. Honestly, 50 isn't a big deal if they don't start doing it every meeting. Yeah, I agree. Seems like not much after the correction from the sell earlier today. Yeah, I mean, we're flat. We're waiting for the opening bell. I think, again, that's going to unlock a lot of the volatility. Yeah, it's tough to tell Tiny what's going to happen. If Jerome Powell starts cutting rates next month and then continues to cut for the rest of the year, interest rates are going to start to decrease within 6 months to a year. When that happens, the only thing that I worry about, right, like buying houses, is so if we do start cutting next month, right, here's a scenario. It's definitely not a certainty. If we do start cutting rates and interest rates drop, let's just call it like 4% by next spring. Right, once the springtime real estate market starts to hit, lower interest rates are going to be there. An influx of buying could start, and it could turn into a really big seller's market really, really quickly, pumping up prices, pumping up everything. Again, that's a scenario. I don't even know if it's likely, but it is a scenario. Another thing, we had the SOM indicator trigger, which signals a recession. If we do hit that, that's a different story completely. People stop buying as much. Interest rates are lower to try to save us from that situation, and that's a different situation in which we don't necessarily get price spikes in real estate. So it's up in the air, and it's hard to predict even if we do start cutting rates, because a lot of the time if we start cutting rates in order to save ourselves from a recession, people are going to be nervous about buying more than optimistic. So it's yeah. People aren't just going to go out and buy houses. Prices are too high. I understand, but I also think you got to understand as well that you always have that argument in stocks, right? Like a lot of people 2 years ago thought stocks were too high, right? So the S&P, the NASDAQ was at like 340s, 350s, 360s, 370s. And at the time, everybody said, oh, stock prices are too high. We shouldn't buy it. Right, and then what happened? We had huge, ridiculously large, like 0.4 or 40% increases from then. And a lot of people missed out on that huge bull run that we got, and so the reason dollar cost averaging is such a good thing is because it gets around that, even with real estate, right? So if I buy a rental property now and then prices do drop next year, you know, I buy another one, average in, you know. Refinance maybe, use that money to buy another one, you know, and then try to get into a couple. I think it's fine, but everybody's different, you know. Let me end this poll. I forgot to end it here. All right, we're going to do the same poll. Do we get bullish or bearish action? Do we get bullish or bearish action after the open today? Vote on that poll. Hey, what's up, Casey? Hey, all good, brother. All good, man. Stay safe. I'm ready to do jiu-jitsu today, man. Jiu-jitsu's fun. It's like video games. It really is. It's kind of like video games. There's a difference, though. You know, like when I started trading jiu-jitsu, I had been watching MMA and was kind of like a super fan of MMA for years and years and years. You know, there's a different thing. Like you'll see people come into it and they have no understanding of like what a mount is, what guard is, what submissions are, or anything like that. I already knew a lot of the submissions and everything when I went in there. I just never had practiced them. I had never done them myself. But and so I think I had a sharper growth curve than some people because I already knew what it was. But it's fun. Yeah, I'm not gonna shout out anybody. Just because there's too many traps, bro. People be like, hey, shout this out. I'll shout out Stephanie. Shout out to Stephanie. I'm not going to say any last name, anything, you know. Just because there's so many traps there. People try to get me to say all kind of stuff. Poker got me into jiu-jitsu? Really? I think jiu-jitsu is like chess. It really is, you know. And so I think sometimes the smarter people grow to the top. Top 3 smartest and dumbest traders and jiu-jitsu practitioners in the world right now. But no, it's fun, man. It really is. I like doing it. I can go beat up or get beat up, you know. Give a shout out to Rosie. My dog's name is Rosie. Don't you steal it. Bro, people be copying our names, dude. My son's name is Jack, right? We named our kid Jack within like a couple months. Within a couple months, like a lot of our friends decided to name their kid Jack too. It's just kind of like, all right. Same thing with Rosie. We named our dog Rosie. I have a friend. They got a dog and named their dog Rosie right afterwards. I'm like, look, I know I'm the top 3 dog namers in the world right now, but come on now. Hey, thank you, Relaxation. I appreciate it. Yeah, Justin, the GOAT. What's up, man? How you doing, brother? Jack is just a strong name. Good name. I like Jack. My grandfather's name was Jack, right? So that's why we named my son Jack. Again, if y'all heard my real name, you would think it was the most ridiculous name ever. I'm not going to say it, but Nvidia just broke highs. It's up to 119s. Look at Nvidia. This should make the market spike here. I'm going to buy this dip in the NASDAQ here because Nvidia's spiking up. It's just kind of retraced a lot of it, but I think sometimes there's a delay. We're flat. We're going to add a little bit more, get 4 contracts in. Trade with the profit we have on the day. Took half of it off. 2 contracts left. Built up a little cushion on the trade, so even if it turns on us, we still should be all right. Depends on what you think Nvidia is going to do here. Yeah, we're going to have to cut it. It might retrace back up. We lost. That's a second loss of the day. We're still up almost $100 though. Opening bell's in 3 minutes. I don't want to hold this through the open. I could say the same thing about boxing. I love it, but I'm scared about breaking bones. If I join jiu-jitsu, just tap. You know, tap. I mean, I'm not saying my joints don't hurt. You know, I got armbarred last week. Arm still hurts from it. But I think it also makes them more resilient, to be honest, in a way. You know, like, it makes them stronger. So just tap. Tap early. Tap often is what they say. You know, the more experienced people will actually tap more than stubborn white belts like me. I'm stubborn. I don't like tapping. But if I roll against like a purple or a brown belt, they'll let you get in a really good spot, like position-wise. Like they'll let you basically lock up a submission, and then they'll see if you could finish it. And they'll tap easily, right? Like Craig Jones taps a lot. So you can actually tell who's more skilled and higher belt by how often they tap. Because if they tap more, they're usually a lot more humble, and that usually comes with higher belts. So it's interesting. Tesla just turned and went red on the day. Technically red, down to 207s. Would the market go up or down today? I have no idea. If Jerome Powell walks outside on next Thursday and stumps his big toe on his right foot, which way will the market head? MU starting to test highs. Nvidia completely turned all the way back down. Market opens up in about 1 minute, chat. 1 minute. All right, guys, here we go. Here's the opening bell. Let's do this. All right. All right, here we go. Let's see if we get anything good. This is good opening bell music, I think. All right, Nvidia falling all the way down to 118s, giving back a lot of the gains it put in earlier. SPY moving up a little bit. Testing the top of this range way over here. Yeah, it's kind of slow with the opening bell. I mean, Nvidia's consolidating. We're over that high level, though, that we tried to break. We still got this little level right here. But we just had a big rip at the opening bell, to be honest. Watching Tesla move up, MU move up, SPY move up, AMD move up. Nice slowdowns here. We could buy this dip. I'm going to let the opening bell play out. I'd like to let the first 5 minutes play. All right, so we're pulling back a little bit. All right, Tesla at 206. Still breaking down a little bit. Big turn here. So again, we're waiting for the opening bell to fizzle down a little bit. But I'm trying to do my best not to jump in anything 5 minutes after the opening bell when the volatility is high. All right, so we've turned all the way back down. Now we're completely flat at the opening bell. Nvidia's down to 117s. And even though I usually like attacking chop, this looks bearish to me. If we get a little bounce up, I'll short. But I'm waiting for it. Yeah, it's that Mortal Kombat music. Going back to my childhood here. 2 contracts here short. This is taking too long. I'm going to get out flat here. I think it's too high that we're going to bounce back up short term. And maybe I just got faked out, which it looks like I did. The bearish sentiment was right. Oh, well. Patience. Oof. Yeah, it's a pretty big twist here on me. Yeah, I got to get out of this. So we're down 50 bucks now. We'll come back. I was right about the bearish sentiment. And I tried to catch the bottom, but and there's the bottom. See if I try this. This works sometimes. Oof, just getting punished here. Give it back what I made yesterday. Okay, maybe not yet. I like the gap fills on these big retracements, but I just took half of this off just to protect the trade. I don't want to give... I was down hundreds. I don't want to risk that. So I'll figure out what I want to do now. And then... I'm going to cut this. So we probably... We didn't manage the trade the best. But the SPY bounced right at that previous closing price. I'm going to short this now. We'll add to it 4 contracts. We got to hold down in profits long enough to take advantage. There we go. 2 contracts now. I might add right back to this. There we go. Alright, so we made a little bit. I like this big breakdown, but oof, big pop. I don't like this. I'm gonna take at least half of this off. Back to single digits, but kind of flat on the last few trades. I think my short would have worked. Breakdown. I was gonna buy that. No, short. Oof. Yeah, I don't know if I'm reading it correctly today. And I think my risk is getting up there. And we'll retract my previous statement. There we go. Alright, so maybe we are. I thought we would get a little flush, but now we're kind of just flat. Maybe I'm down a little bit. We're too high. We're rangy right now for sure, but eventually we're going to crack this range. I was trying to take advantage of it. Market's really muted. SPY's trying to push up. I'm watching Nvidia here, but Nvidia still looks red. I'm going to go ahead and take a longer term risk here. There's 4 contracts. There we go. It's better. Very choppy right now, guys, to be honest. Kind of just going up and down and up and down. I'm trying to maintain a good risk level, to be honest. I don't want to risk too much, but I also want to be patient enough to let it work. I think if we're going to break the range, it's going to be on the downside, it seems. Yeah, there it goes. Scalp it away. We'll see if we... yeah, there's the downside range break that we thought we would catch. We profited some from it. Yep, there we go. There's the downside range break. We were correct. Kind of adding into it, covering. All right, so we're basically flat on the day. We came back. Still pretty close to the opening bell here, so we're still playing around. If you want to, this is a 50K funded account on Apex. So if you want to trade with me, here's the link. Check it out. A great way to learn how to day trade. Most day traders lose. You put up 5K, you're probably about to lose that. I don't care who tells you anything different. You're probably going to lose. It doesn't matter what course you take, who your mentor is. You're probably going to lose if you try to day trade yourself. with your own money. Instead, limit your risk. Try a funded account program. You're still probably going to lose, but it's a lot cheaper to lose on Apex than it is to put up $5,000 and lose that. If you pass it, you get a 90% split. If you fail it, you only lose the monthly subscription. The base one, you get $25K in funding. It's $30 a month if you use my coupon code and link. You got to make $1,500 without losing $1,500 first and following their rules. It comes with real-time data, which costs about the same, about $30 a month if you were going to pay for it independently. And it's just a good option to learn how to day trade instead of risking your own money. Don't be stubborn. You'll see people like, no, it's not real money. It's like, yeah, but almost all day traders lose. Why would you want it to be? It just doesn't make sense. Check it out. Here's the link. They paid out hundreds of millions of dollars to their traders. Check them out. They're a sponsor of mine, though. I'm biased. They pay me money. One of the top 3 most biased traders of all time ever in the world. Confirm it all with them. I can't guarantee anything. I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade responsibly. There's the link. Yeah, so we were right. Remember, what did I say? I said, hey, I just now saw y'all can't see this. My bad, guys. I'm sorry. Y'all can't even see my trades. Did anybody tell me this? Thank you. Shout out to Poker, because he's the only one that was like, yo, you're blocking the chart. Sorry, guys. Or maybe there's more. I told you guys we were going to break down, though, and I was correct, right? I said if we're going to break the range, it's going to be on the bottom, and that's exactly what we did. SPY under the previous close. Nvidia flushing here. This is what's dragging everything down. Okay, all good. Whoever said that, I'm sorry. I just now saw it. My bad. Yeah, what a big stream, though, today, guys. We had, so far, this stream has got about 30,000 views. So shout out to you guys. Hit that subscribe button if you haven't already, chat. We appreciate the love. As always, guys, thanks so much. We're going to keep on trading. Don't worry. Hey, thanks, Martin. Yeah, there's this big old flush down here. I'm going to start buying this dip. I think we're starting to hit the bottom. But I might be wrong. We got 3 contracts here. Trying to take a little risk. Trying to establish a bottom position here and just hope we don't keep dumping down, which it kind of looks like we are. Let's see, we're about flat now. There we go. We're actually green on the day for the first time in a while. We've scalped our way back to green. Tomorrow we have jobless claims, the Empire State Manufacturing Index, the Philly Fed Index, and retail sales data. It's an absolutely huge day. And it'll be a big influence too. We got like 4 major economic reports dropping at 8:30 tomorrow. So it'll be a big report. Definitely downtrending today. Where's the Russell? Has the Russell? I haven't even been watching. What is it? RTY? Yeah, the Russell. I haven't even been watching it. It's down big today too. What's the Russell doing? So the yen carry trade dumped the Russell too last week. Okay. So we're still heading up a little bit in markets. I'm still trying to wait. All right, guys. So again, we're rejecting here, sitting back. Yeah, so again, I'm just sitting patient here. I haven't seen any big edge plays over the last like 5 minutes. I'm just waiting. Yeah, we're right back up. We're kind of flat, so that's why I kind of slowed down my trading here. I just don't see any big edge movement. All right, Tesla breaking down a lot, dragging the whole market down. I'm buying a really risky spot, but I think sometimes high risk, high reward pays in this situation. So we're out. So we just scalped about $30. So up small on the day. You know, it's not the biggest day, but it's all good. It'd be awesome. We get back to 75 and Nvidia to load up. Yeah, 75 I think is a pretty low opportunity. All right, we're up again. Patience, and we're back up to about $100 in profit a day. Not the biggest gain here, but we're kind of sitting tight waiting. Appreciate all the subs today, guys. Genuinely appreciate the love. Thanks so much. Again, we've got a lot of choppy action moving forward today. Maybe next portfolio is basically all metal and PayPal. Where's PayPal doing, man? Like, I'm seeing bearish action in the stock market, but I'm also kind of skeptical. We're gonna take another big risk here, not a big risk, but a risk nonetheless. See if we get a retracement bounce that we look for here a lot of the time in this situation, in this spot. I don't want to add any more to this though. Man, we're kind of going back and forth today. I do not like that move at all. So we're out. We're down 35 bucks now. Oh, dude, right before I took profit, it basically turned on me all the way back down. But now it's coming right back up. Let's see if we get it green. Flat. SPY is still at the bottom. It's really choppy day, so I'm not surprised I'm going back and forth today. It's just kind of boring, man. Like, I don't mind losing 100 bucks. It's not significant, but yesterday we made a few hundred, so today it's just kind of big turnaround now here. We're gonna have to cut it. I don't know. I might just sit it down for the day. We'll see. You know, like, I think we might still have time to make money, but I think we got to just be smart and patient with it. You know, if I lose, I lose. It shouldn't be a big deal. Market's turning a lot, though. I think we're going to bounce back up here eventually. I don't think we're going to keep trending down, but anything could happen. Yeah, I mean, I'm kind of back to flat. I guess I'll show you my trades. Sometimes I just got to trade off stream, you know, but... And now we're flushing all the way back down. I don't want to add to this either. I think we're going to stabilize right here. At least I hope we are. If we don't, though, like I said, we're down 60 bucks, 50 bucks, 40 bucks. If we start to bounce up, I'll add to this too. But see if we get green on the day. But it's been up and down, up and down, up and down all day. I just see some blue chips starting to bounce. I can't quite add to this, though. Why did I say what was neutral, Blob? Ugh, that's the wrong cup. Oh, man, I just drank from the wrong coffee cup. Bro, it happens at least once every month or so. I'm just going to call it nature's kombucha. Sounds like a product if I've ever heard one. Coffee kombucha. Old coffee, you know. Healthy. Same logic as kombucha. Yeah, we're definitely... I've definitely been wrong about this for sure. And I don't like this trending down either. I was hoping we'd get... I mean, the last, like, 1, 2, 3, 4, 5 minutes has been sideways. But we could always break out of this downward range. Anything could freaking happen. I don't want to get stuck in more downward pressure either. I'm hoping we retrace. But the SPY just cracked. The SPY started to test pre-market lows. Oh, there we go. We're back up. Okay, that's better. We're almost green on the day now. All right, we're out. We're up about 30 bucks on the day. Probably flat with all the fees overtaken, maybe worse. Yeah, so comments like Blob are funny. John, why did you say it was neutral? It came down. Are you talking about the market? Like, am I not allowed to be wrong about something? I might have been wrong. I don't know. I think when you zoom out here, we're definitely down on the day. And so maybe I was wrong. If you look at the entire range of the day, though, I think we're at the very bottom of the range. But again, if we zoom out more, like, it's easy to isolate a time frame. Like, I could say, hey guys, I think we're going to be bullish at the opening bell, right? But if you zoom out, I can say, hey guys, I think we're going to be bullish referencing the opening bell. But if I put a 10-day chart up, we're red. But if I put a yearly chart up, we're green. You know, and so you can always isolate any time frame, take it out of context, and use that as an argument against me being wrong. It doesn't mean I am, but at the same time, sometimes I am wrong. You know, top 3 most wrong trader of all time ever in the world. Don't copy me. And if you lose money, it ain't my fault. You know, like I'm top 3 worst trader of all time ever. And so if you copy me, it's your own fault. We literally got big white letters on the bottom of the screen saying, hey, don't copy me, not an investment professional. We're not liable for losses. Be your own trader. Yesterday's coffee is today's treat. Yeah. So is it accurate to say the market is responding negatively to the CPI report? Yes. yes, we are down relative to the CPI report for sure. There's a lot of reasons we could be down. One of them could just be extension. We pushed up a lot leading into it, so like the outcome was already baked in, and so selling and profit taking is happening. Is most likely the scenario that we're seeing right now. Is that people took profit on the strength that we've seen leading up to it, basically. No, I don't think that has much to do with it, Dr. Crypto. But maybe, who knows? Trash day, brother. Yeah, I mean, I'm slightly green somehow. Again, I'm going to buy one contract here, maybe add to it, and see if we can get a spike up. But we're at the very bottom of the daily range, and so I think this is like we got such a small profit on the day. If I give it back trying to take a risk here, it's okay. And maybe if we do bounce back, we'll take a longer term day trade here and try to play with that. But we got to be patient, I think, with it. Now we're taking a big risk. We got 5 contracts here. It'll be our biggest risk of the day. We're close to it. See if we can bounce back, turn bullish here. The profit taking has happened. We're at the bottom of the range. Maybe we'll get an opportunity. Either way, it's all good, no matter what. All right, we're flat. Now we're slightly green. Take a little piece off of this now and then try to let the last 3 contracts work. It's just so choppy, to be honest, man. We're slightly green, flat, red. None of it matters, really. It's a big turnaround. That's a big drop. I'm going to cut it. We're down less than 50 bucks. I think I'm just going to bow out for the day, guys. I just don't see anything favorable, in all honesty. Yeah, so I think I'm just going to close it down for the day, guys. Again, if you haven't already, check out Apex. Apex funded account program in futures. They give you a demo, test your skill. If you pass the test with the demo, they fund you between 25K up to 300K. You get the base one for 30 bucks. If you lose, you're only out 30 bucks. It's not the end of the world. If you pass it, 25K in funding, 90% split. They pay out millions, fund thousands. One of the most legit, paid out over 250 million, I think, since 2022. Great way to learn day trading with limited risk. You still have some pressure, not the full extent of risking your own money. but you're still risking something. Comes with real-time data, so it's kind of like a souped-up paper account. Just useful for traders learning day trading and overall. If you want to check it out, I'll put the link up. Great way to help support your boy here in this channel. Although, again, I'm one of the top 3 most biased traders of all time in the world right now. If you want to check them out, here's the link. Right now, market's slowing down. I think we probably hit a bottom, but who freaking knows? I might be wrong. I'll see you guys later. Love you all. Have a great day, guys. I'll see you guys bright and early tomorrow. Tomorrow, we have jobless claims, Philly Fed Index, retail sales, New York Empire State Manufacturing data. All dropping at 8:30. Huge report day. Be ready. I'll see you guys tomorrow. Y'all be good. Basing the whole day off of 37 minutes is crazy. I think in day trading terms, not so much. I think most of the action happens in the first hour, Zach. And so you're going to have like big volatility in the first hour. After that, it slows down a lot. Now the day overall, I'm talking about specifically just today at the opening bell, the opening volatility. The rest of the day, it could go up, down, or sideways. That's much harder to predict what that's going to do, especially leading into the reports. I think we might be choppy. I think we might bounce here. But who knows? Maybe I'm wrong. It doesn't matter. Either way, we're just referencing the opening bell. So I'll see you guys later. Y'all be good.